margin trap. Now I scalp regret in a 5-screen habitat. Clocking Fibonacci spirals into cardiac arrest, watching algorithms feast on whatever's left. God mode toggled off, I'm in the basement with my flaws. Trading Ivy like it's heroin, withdrawals and applause. And I screamed at the top of my debt, should've sold when I had some left. Now I'm crying in the shower again, with a bottle full of red and regret. This is the crash, get ready, fuckers. We dance with the devil and bet on the numbers. This is the end, your bags, your coffin. No bounce coming, the drop ain't stopping. We so screwed, it's a murder seed. Stocks bleeding out on my cracked touchscreen. Say bye, need to liquidation. Tell your boss that you're on vacation forever. I bought the top, now I live in hell. Rest in peace to my calls, no get well bell. My broker ghosted, my funds got fried, and the only thing green is the envy inside. Was a king with a plan, now I'm broke with a mean portfolio wreck. Can't wake from the dream, charts look like a plane going nose to ground. Tried to double down, now I'm double clowned. This is the crash, get ready, fuckers. We dance with the devil and bet on the numbers. This is the end, your bags, your coffin. No bounce coming, the drop ain't stopping. We so screwed, it's a murder seed. Stocks bleeding out on my cracked touchscreen. Say bye, need to liquidation. Tell your boss that you're on vacation forever. That you're on vacation forever. That you're on vacation forever.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning. How's everyone doing? It is a beautiful Wednesday, April the 9th, and man, oh, man, our tensions high. Man, oh, man, our emotions high. Everyone is just a little tense today, you know? Everyone's just a little ramped up. So I guess it's my job to remind everyone to just chill the fuck out. We get it. If you're dialed in to doom scrolling on the internet, every single minute bar on the chart, yeah, it's going to drive some insane feelings in you. So I guess I have to put on the responsible parent hat today and remind everyone, yeah, there's some craziness right now. And that's how the world fluctuates. We're in that pendulum of boring and nothing happens to pure insanity, back to boring and nothing happens. And we just happen to be at one extreme of the pendulum. Everyone take a chill pill. As an active trader, you know what to do. It's not the easiest environment, but you know what you have to do. Trade the trend. If it's down, be bearish. If it's up, be bullish. Respect your risk and don't over leverage. Do exactly what you need to do. As a long-term investor, these are buying opportunities. If you are selling right now as an investment, if you're getting rid of your blue chip stocks now, today, you don't deserve a place in the market. You're doing exactly what you shouldn't do. Like, you are on the polar opposite of what you should be doing. The exact opposite. As a long-term investor, don't worry about it. It's going to come back. I don't know when it's going to come back, but it's going to come back because that's what's happened every single time in U.S. stock market history. Is there potentially more pain? Of course there's potentially more pain. So just wait. When you think the bottom's in, buy more. And then, like I said, you're waiting 5, 10, 20, 30 years. As a long-term investor, you're going to be fine. But if you're seeing it going down, you're like, should I sell? Why? Why in the world would you ever possibly do that? These are the times with your long-term investing account that you're like, okay, I'm just going to keep buying a little bit here, a little bit here, a little bit here, a little bit here. And then you come back years, if not decades later, and you're like, okay, cool. I bought this and that's what I should have been doing. So as a long-term investor, the plan does not change. If there's a dip, you buy it. These levels right now are the exact levels that months ago, people were like, oh, I wish I could buy it there. And I missed the boat. It ripped. And now you're being presented with the opportunity and people are like, well, I don't know, man. Actually, I might not buy. I might just actually sell. Like, just it's a calm, cool head. Like when you're seeing these types of market, like just pure chaos, insanity. I'm by no means saying it's easy, but the investing side really is easy. The further we go down, you continue to buy and buy and buy, and then you just wait and you wait and you wait and you wait and you wait. As a long-term trader, if you want to engage in this arena, I highly recommend sizing down. I also highly recommend using a little bit of a larger time frame. Maybe don't be on the 1 minute, the 3 minute. Maybe start using the 10 minute, the 30 minute, the 1 hour, the 4 hour, taking a step back, because right now per minute, we're just seeing insanity. And I think those fluctuations in such a short term could really entice you to be doing something that maybe you shouldn't be doing. So as an active trader, it's a wild market. And if this isn't really your cup of tea, remember, it's okay to not trade. If you're looking at your active trading portfolio, it is completely acceptable to sit on your hands if you want. If you're like, you know what, I don't really feel like trading it when the VIX is near historic levels, when we have news that you never know which way it's going to break, we're moving multiple percent in such a short period of time, it is completely fine to just be like, yo, I'm going to wait. You don't have to trade every day. So with it, like, I get it, and I'm on the internet myself, obviously. That's how we're all talking. And like, I'm just seeing such like an intense fear and panic, and like a lot of people that are seemingly just need to hold hands, sing kumbaya, and get a hug, and just fucking chill, folks. Just chill. Just chill. If this is the worst thing you have to deal with this entire year, you're doing pretty damn good. Don't get caught up in such a negative emotional spiral, because I really do believe that's what's going to prime you to make the exact opposite decision of what you should be doing. So just chill. Just chill. It's going to be fine. It's going to be A-okay. And if you don't want to actively trade, fine. Sit on the sidelines. You don't have to trade. As an investor, don't panic sell. Panicking, as the president would refer to it. Just as we get to these key levels, if you think we're starting to turn, you add a little bit in. You don't have to do all of it all at once. You could do it in chunks, and you're not trying to time the bottom here. You're trying to get roughly close to the bottom, and then you're coming back in years. This is not the time to panic. What did I just saw a piece of breaking news. Hang on, what is this? EU adopts tariffs on 21 billion of U.S. goods in metals dispute. Oh, that's probably not the headline we wanted to hear right now. Okay, well, as you guys might have seen from all the very heightened negative emotion, we got some bad news and we got some bad reactions. So right now, we're seeing a little bit of a pop, but we're still in the red territory. Not long ago, around 8:30, things were considerably worse. Over the past 30 minutes, a little bit of green. Doesn't matter to me, though, because the cash session is not open yet. The VIX is still hanging out at 52. If you're seeing this little pop right here in the past 30 to 45 minutes, and you're thinking somehow that the bulls have regained control, I don't know. I need to give you the number of my optometrist or something, because you are just not seeing this clearly. This is a wild, wild situation. So let me break down what's going on and then potentially some things to look for today. S&P 500 futures fall after the U.S. tariffs on China take effect. Basically, they took effect yesterday at noon, and then at midnight, really starting today, is when they're starting to collect money, and it is at a sky-high amount of 104%. Right now, we see some craziness. Obviously, the two major players in this right now are U.S. and China. Many other countries are seeming a bit more amicable, while, as you're about to see, China is going the exact opposite way, and it's kind of becoming this fight of a tit-for-tat fight of bravado, of hubris, of ego, right, between their president and our president, Xi and Trump. It's just, all the memes are obviously hilarious, but it is a very serious situation. The humongous 104% tariff on China is live. Even Musk seems perturbed. I honestly just wanted to read that to you, because I don't know if CNBC has ever used the word humongous in one of their headlines before. So not only are we seeing a historic event of potentially just market volatility and insanity, something that's going to be going down in the history books, but we're seeing another piece of history here of potentially the first lamestream media source to use the word humongous in one of their headlines. So I obviously had to share that with all of you, but this is what's going on. And you're not reading that wrong. I did not edit this. This is 104%, and it's being collected as of today. Trump's new reciprocal tariffs take effect on imports from around the world. The new round of steep tariffs imposed by President Donald Trump took effect on products imported from scores of countries around the world. The round of so-called reciprocal tariffs exceeds a base rate of 10% that was imposed on many other countries over the weekend. China is being hit with a new 84% tariff. We have some other news, obviously, to go on because this is all it's all just getting so crazy. Anyway, as part of the overall tariff of 104% on its exported goods to the U.S., obviously China not happy with that. China holds firm on immediate retaliation against the new U.S. tariffs. China did not immediately respond to the latest round of U.S. tariffs, unlike the past when Beijing retaliated within minutes. But that actually didn't hold because we're seeing some news this morning. China says it will continue to take, quote unquote, resolute and forceful countermeasures as U.S. tariffs kick in. And yes, they did. The China Connection newsletter, no deal in sight to stop U.S. China. So we see that we hit them with 104. They're retaliating. We're expecting updates today. Everyone's like, what the fuck is going on? And we're seeing craziness, not only in the currency market, the Forex market. Check out what's going on, obviously, with the U.S. dollar. Check out what's going on with the yuan. Check out what's going on with the yen. Currency's going crazy, but then so is fixed income. You've probably, if you're doom scrolling on Twitter today, you're probably seeing that yields are just ripping. The 10-year yield, the 30-year yield. Yields are ripping. Bonds are dumping. Generally, you don't want bonds dumping when the stock market's also dumping because that's considered to be a flight to safety. And what do you do when the flight to safety is going down? We're even seeing oil drop. The only thing that's maybe looking good is volatility in gold. But anyway, there's legitimate concern here because it doesn't seem like we're that close at an actual resolution. The market wouldn't be behaving in the manner that it currently is with all this uncertainty when apparently they're nowhere close to even talking. Breaking, China raises tariffs on U.S. goods to 84%. So that's the latest round of retaliation. And obviously that's true as of 7 this morning. But who knows how, as of tomorrow, I might have to update this and give you guys the new tariffs. But we hit them with 104. They're hitting us with 84. I do want to remind you that on a ratio size, they export 5x more than they import from us. So our percentage is higher. And also just from the pure magnitude of the dollar value, it's going to be impacting a lot more because we import quite a bit more than we export to them. So literally at 1/5 of the size, they're hitting us with 84. But then at 5x the size, we're hitting them with 104, just to give you a little bit of clarity on the numbers. At 12:01 a.m., when we were all fast asleep, and by fast asleep, I mean we were all up feverishly checking the overnight market, additional tariffs of 50% were imposed on Chinese imports to the U.S. 7 hours later, China announced new tariffs of 84% on U.S. imports. This is including the 34% that China is already charging for a total of 104. Currently, the U.S. is charging China a total of 104 in tariffs. The Trump administration has a pledge to retaliate against all tariff increases on the U.S. We expect another increase in U.S. tariffs on China in the coming days. We are witnessing World War III of trade wars. So as I alluded to, even though I hit you guys with that number 104, I wouldn't be surprised if we have an increase today, tomorrow. I think I'm actually going to have to quickly update that number. Obviously, as you can see, the market not liking it. The U.S. stock market futures collapsed over 100 points as China imposes additional tariffs of 84 on U.S. goods. Right now, we're seeing a little bit of a bounce back, a little bit. I mean, the SPY is slightly red. The Qs are slightly red as well. They're both below, but obviously this is considering a massive sell-off. So the fact that we're a bit more red after massive sell-off, not exactly where you want to be. And you might be thinking, okay, what's the president have to say with all this? Is he giving us any calming words? Is he telling us that no, it's not a drunken monkey sailing the ship, but it is a captain who knows exactly how to navigate these choppy waters? No, it's not that. Instead, we're just getting hit with a fresh "Make America Great Again." 7:46 in the morning. This is actually probably the most humorous thing of everything going on. In all of this chaos, there at some point today, Trump thought, you know what I need to do? I need to hit everyone with a nice, crisp MAGA. I need to get out there and just fucking nail them with a "Make America Great Again." like that happened in real time, in all of this craziness, when everyone's like, holy shit, is the fixed income market collapsing? Yields are ripping. We're seeing bonds collapse. We're seeing the SOFR swap differential expand. We're seeing massive liquidity issues in the treasury market. We're seeing China drop all of their US treasuries to convert it to the dollar so then they can use the dollars to then buy their own yuan. We're seeing the craziest shit go on. And Trump's like, you know what I need right now? You know what the world needs right now? A nice, crisp MAGA. Just fucking hit it with it. just hit the world with a MAGA. Crazy. U.S.-China brawl takes center stage in global trade war. A 20-year trade imbalance between the two economies is at the center of Trump's tariff battle. I have quite a few thoughts on this, and it is interesting. I guess I'm of the opinion that, of course, I think tariffs should just be equal. Like what people tariff us, we should tariff them. But also, looking at the imbalance, I don't think that's necessarily bad. I think there's a lot of jobs that are completed in foreign countries that just what's the point of doing it here? We have completely different labor forces. This idea of like, no, the imbalance is bad. Well, no, that's just we're importing a lot of products from countries where they're willing to do certain work that I just don't think in average America wants to do. There's so many memes flying around the internet right now making jokes of like the average American building out an iPhone. Probably not going to happen. And I also don't see how it's going to happen when our unemployment is relatively low. We're not even at 5%. So when you're looking at what's going on in the U.S. workforce, this idea that it could continue to expand and take on all the jobs that most people don't want, I guess I just don't agree with it. I think there's a lot of things like why should the U.S. labor force be a perfect mirror of these other countries where it's not necessarily the highest skilled, highest paid labor? I guess I just really don't get that goal of measuring it between, nope, the trade needs to be exactly the same. There must be something going on deeper than that is just not evident right now, or maybe they're completely fine with like the cheap labor costs overseas, but then they want them to, I don't know, be buying more of our treasuries or be buying some of our energy. Like maybe they're looking at it of, we don't care the type of the work, but we want to balance it out. Maybe that's going on, but regardless, the whole thing is absurdly crazy. And you could see that obviously in the market right here. It's just truly insane. Quick note on the market, and we could talk about this later. If you in any way think that using technical analysis is like appropriate, that's insane. You think right now with the VIX clocking 53 in truly a historic moment of the market that people are like, hey man, did you see that bull flag? Did you see that head and shoulders? Did you see that Octopus 8000 setup? Because that was a pretty crazy, like the fucking technicals right now on an intraday basis, it's just insanity. We are living in a world where you could basically argue technicals don't matter, options flows don't really matter, because it's just such a news-driven thing. Like we are exclusively all sitting around waiting for, did we get positive news? Did we get negative news? And news is just ripping through it. It doesn't care about the flow of options. It doesn't care about technicals. It doesn't really care, obviously, about the health of our account. But I just want to let you know that using like, you're a fucking lunatic if you think that technical analysis is somehow the thing that is going to tell you the secret of what's going on at the market. Yeah, that's fine. Maybe in quiet times where you're like, okay, here's my risk point. Maybe we're going to follow through. But in this environment where it's like 99% driven on just the most insane stuff, and you're like, all right, yeah, I'm seeing a little bit of a bear flag here on the 1 minute. Like, dude, like, all right, let's calm down and have a little bit of better appreciation for the actual moment. Not necessarily related to the U.S.-China thing. It is in a certain way, but we got another update from Trump. Trump says pharmaceutical tariffs coming very shortly. So that might be another piece of news that we find out about today. So I want to let you know that. Today in itself, we are going to kind of find out a little bit more about the fixed income market. We're going to get the 10-year note auction today at 1 p.m. There's even some murmurs that they might cancel it because of the craziness going on in the bond/yield market. And then at 2 p.m. today, we're going to be getting the FOMC meeting minutes, and then that sets us up for tomorrow, where we're going to be getting the inflation report, the CPI report, and the 30-year bond auction at 1 p.m. And then on Friday, we have another inflation report, the PPI. So we have CPI, PPI tomorrow and Friday, and then today and tomorrow, we're going to hear from these bond auctions. So at 1 p.m., you might want to be paying attention. Overall, Trump's tariffs put Fed Powell in a no-win situation. It really is a no-win situation. Like, this guy, he is currently being tasked with one of the most ridiculous jobs of trying to keep inflation down and trying to keep price stability high. And just the hand that he's been dealt, you can't be dealt worse something than a 2-7 offsuit. But he was dealt a 2-7 offsuit, and behind one of the cards is just like a ticking time bomb. Like, I don't even know how it could be worse than that, but it is worse than that. Being a Fed member right now is truly insane. Like, how could you possibly keep things calm? How could you possibly be like, all right, we got to fight this inflation issue, when just every single day there's such a influential shift in what's going on in global trade, and it's getting to the point where, I mean, let me show you this. Like, this is just US 10Y. This is the 10-year yield, and why everyone's freaking out overnight, because we went from 3.9 up to 4.4 right now. At one point, we were at 4.5. Looking at the 30-year yield, which is actually even crazier, this one went from 4.34 all the way up to in excess of 5. Like, this yield was ripping, which on the flip side means that bonds are plummeting. Like, this is a look in real time at bonds are just getting nailed. Yields are ripping. And this is all happening when we know that the Fed is taking their foot off the pedal when it comes to quantitative tightening. They are still in a phase of quantitative tightening, but not as extreme as they were. That was like the big update recently. But with it, you guys are probably seeing a lot of things on the internet right now, especially on Twitter, about the SOFR rate, the swap rate going negative. That's not a good sign at all. Like, it's literally just an overall market risk. This is what we saw happening in 2020, in March of 2020, where so many people were trading the basis trade, which is basically just the differential between the futures market and the current treasuries. And it's a small difference, but they take advantage of that. They play that little arbitrage. And what they do is they do it, even though it's a small difference, there's not that much money. So they lever it up to make more money. They'll do 20, 50x leverage. And that basis trade works until it doesn't, until you get to crazy environments. And that's what happened in 2020. So many people were playing the basis trade, but then it started to expand and they got margin called and blew out. And then that caused them to dump the treasuries, which caused the spread to get worse, which caused more people to blow out. And that's why in 2020, if you look anything up about the basis trade, and why some of the drawdown in 2020 was so extreme, was because so many hedge funds had so much levered money trying to play that, and it just blew up in their face. And then that actually eventually forced the Fed to step in with quantitative easing to stop the market from getting absolutely knocked. And there is a very real chance that we're seeing that right now. I mean, the SOFR swap rate, it's completely diving. We're seeing yields rip. We're seeing bonds like really sell off, and it's probably because some people are getting margin called. It probably started because the CCP, President Xi Jinping, they probably wanted to stabilize the yuan, so they needed to sell. I think they had upwards of $800 billion of U.S. treasuries. So like, okay, we'll convert that to U.S. dollars by selling it. So they were selling treasuries just so they can buy yuan, their own currency, to stabilize it. So they were selling it, causing the basis trade to have some pressure. And then we're seeing some instability in the repo market, the overnight lending. So we're seeing instability. We're seeing high tensions. We're seeing liquidity issues. And this is the making of potentially something fucking insane. Now, is it necessarily going to go that way? I mean, your guess is as good as mine. I'm just telling you what's going on as of right now in the moment. But we just got to pay attention and we got to be real careful. Dalio sees once-in-a-lifetime collapse in economic political order. This is another guy who, for a bit there, I would say some of the major Wall Street leaders were kind of keeping their mouth quiet. But over the past couple of days, we're seeing Dalio, we're seeing Larry Fink, we're seeing Jamie Dimon, we're seeing a lot of people just saying, whoa, like if you keep pushing, we get what you're doing, you want fair trade, Mr. Trump, President Trump, but if you keep pushing, you might go to the point that you break something that you can't easily fix. As of this exact moment, as we're talking right now, everything that's done could easily be undone in a month or two. Like the market could be pushed back. We could have stabilization. We're not really at that point of like, okay, the point of no return, but there's a lot of business leaders, Wall Street leaders starting to say, dude, we're getting pretty close. Like, let's make sure we don't go over that edge. And this is all happening to earnings season. This morning we heard from Delta, and it wasn't so bueno. Delta CEO says Trump's trade war is hurting bookings as airline axes 2025 flight growth plans, and they're not giving us future guidance. Same thing with Walmart. Walmart pulls quarterly operating income forecast, citing Trump's tariffs. So everyone's saying we don't know what to do. We don't know how to predict. And I'm personally interested on Friday. Not only do we get the PPI report, but we're going to be hearing the earnings of JP Morgan, BlackRock, and Wells Fargo and Morgan Stanley. Going to be very interesting to see what these financial leaders have to say. And obviously they're going to be giving us an update on the current buffer and stability of their average client, of their average consumer. So those are going to be really important just to get a little bit more of context for the overall situation. Now, I put all this information in like a one-stop shop. This is free. It's a newsletter that comes to your email inbox every single Sunday. It is 100% free. I give you the earnings. I highlight the ones that I think you're going to care the most about. I give you all the major macroeconomic events. 11 a.m. today, we're going to get another Fed speaker, Barkin. At 1 p.m., the 10-year note auction, and then at 2 p.m., the FOMC meeting minutes. We talked about the CPI report and the PPI, the 30-year bond auction. Also, consumer sentiment on Friday is going to be interesting. With respect to seasonality, today's a neutral day. So at least I don't have to sit here and be like, oh, it's crazy bullish, it's crazy bearish. Over the past 27 years, this particular day, for a bit there was bullish, recently kind of took a big hit. So I would say the overall seasonality is more of a neutral day. And in all reality, I'll be the first one to say that, hey, seasonality is as good as it is. It's not the end all be all. So in particular situations like this, when we're not technically driven, we're not options driven, we're just like purely news, fear, emotion driven, I'll be the first to say that I don't even know if seasonality matters at all on this particular day. A couple of things I saw on the internet that I wanted to share with you. Here's what's happening tonight with the US 10-year. Remember, I showed you that was ripping as the 10-year bond is dropping. Remember, yields and bonds move inversely. As yields go up, bond prices go down. As bond prices go up, yields go down. They are perfectly inversely correlated. Here's what's happening tonight with the US 10-year and the Chinese yuan. In short, US treasuries are raising because China has become a forced seller of US treasuries in order to defend the collapsing yuan. That's what we've been talking about. All Trump has to do is keep increasing tariffs, and this will put the yuan in a death spiral as the CCP is forced to continue selling U.S. treasuries in order to prop up the yuan. It's checkmate. Besant won. Besant's kind of been involved in this type of stuff in the past, so maybe they know what they're doing. I'm not saying that this guy is 100% right, the end all be all. There's some nuances to it, but I just wanted to add a little bit of a context just because we really don't spend that much time talking about fixed income on this particular show. This is what you call a nightmare situation. Treasury yields are now up 10% since April 3rd, while the S&P 500 is down 10%. The 10-year note yield is currently up 55 basis points in 48 hours. It's cooling off a little bit right now, but it was ripping. In other words, we now have higher rates with stock prices in a recession. Something broke this weekend. Yeah, that doesn't make sense because generally the flight to safety is bond. The fact that we have equities and bonds coming down is a very rare event, and it is not a good event. If you look historically, even when the market gets hit, people are generally saved by the fact that bonds are pushed up, and that's why everyone's like, oh, the barbell strategy. You have to have bonds, you have to have stocks, and generally, when one goes down, the other one's going up. So it's a way to like kind of buoy out the situation. This particular time, because of the tariff trade war backdrop, because of what's going on with monetary policy, and because really the actions of the leverage trades here in the U.S. and then China puking all their treasuries, we're getting a very, very, very interesting and rare circumstance where both equities and bonds are going down. That is not normal. That is not normal whatsoever, and it really does it highlights the insanity of the current situation, and it also really does showcase the unique painfulness of this situation, because this is a rare thing. I want to make it very, very clear. It is very, very rare for equities and bonds to both puke, but that's what's happening right now. Generally, you have one or the other, and then the other one saves you. This time, I mean, Jesus, the only thing I really see saving people, even oil is now puking on this whole deal. Oil going from 72 down to 57. The only thing saving people right now is gold. I guess even Bitcoin's not really holding. Gold is what's saving people. The only thing that people are like, dude, we just got to get out of this. We got to get the fuck out of whatever's going on in fixed income and equities. People are just going to gold, apparently. Gold and vol, I guess. Like, those are the two things that are up. Like, this is absolutely insane. Anyway, bringing it to the market, I do want to just kind of call out the fact that we do have upside gap fills, and I know that might be crazy to talk about upside gap fills in an environment like this, but remember, in an environment like this, you can easily get bear market rallies. It is not out of the cards today that not only do we take out the high from Tuesday, Monday, and Friday, it is in the cards to push. I mean, that's just what happens when you get insanity. That's what happens when you have record amounts of trading, not only in equities, but in futures and also in options. That's what happens when you have a very negative gamma structure, because whenever you get going, you can really get going. That's perfectly explained by yesterday. Yesterday, you guys might not appreciate this, but yesterday, Tuesday, April the 8th, was the largest single day reversal we've ever had in US stock market history. And I'm talking about the fact that, right here, the fact that from close to peak, we were up 4%. And then from there all the way to the bottom, we were down 6.8%. And then right at the end of the day, we had another 1.4% pop. This pump followed by drop was the single largest intraday reversal we have ever had in US stock market history. And that just kind of, I really think, explains to you how insane this could be. So even though I get that things are like bearish right now, well, they're not even that bearish. We're down by 0.6% and 0.2. I get that tensions are high. So you might be like, no, it's only bearish, only bearish. No, this is possible. Now, if that does happen when I play it, God, no. The option chain is completely put dominated. At one point, you could just have any news that tanks the market again. For me, right now, in my personal opinion, and I'm not telling you what to do, I'm not your mom, I'm not in control of your money, I think the play today is either bearish or sit on your hands. And even if you are bearish, make sure you're getting yourself enough time. Make sure you're playing with small enough position sizing relative to your account. You have to be humble in these type of environments. You always have to be humble to survive the marathon that is trading, but it's these types of environments that the second you're just a little bit too big, the market's going to make you pay. So pay attention to these upside gap fills. And then also pay attention to the low 4910, which is roughly where we're scheduled, or at least last time I checked, we were kind of looking to open there. We're scheduled to open at 4950. So 4950, I'm watching yesterday's low at 4,910, because if that doesn't hold, that's a pretty easy setup for Monday's low at 4,835, which then does bring us to the interesting open interest levels of the day. So here, feel free to take a quick screenshot. These are how I view the key levels of the day. We have the green, the red, and the white. That is yesterday's high, low, and close. Like I said, we are a little bit closer to right here. We were at the bottom of the transition zone. According to the 0 DTE options market, above this transition zone in the short term is bullish, below it is bearish. This white block between 4950 and 5,000 flat, that's the transition zone. Once again, bullish above, bearish below, according to the GEX and the DEX, the gamma and the DEX, the delta distribution of the 0 DTE. Now, if we hold below it, obviously, bear target number 1, then I'd be looking at the low from Tuesday or Monday or wherever it was, 4,835. And then from there, we have a lot of open interest at 4,800. Now, on the flip side, if we get above this zone and we hold, yeah, we have a decent shot of going up to 5,100. Those are my plans. Obviously, feel free to screenshot this, do whatever you want. But on that particular note, dingity ding, ding, ding. The world's largest casino is now open. Best of luck to all, play responsibly, and if not, have fun. And as a very quick side note, I would highly, highly, highly recommend that you guys have on whatever your favorite news source is, whatever your favorite fastest news source is, because we are clearly in an environment where like a random announcement, conference, interview, tweet, truth, whatever you want to call it, one little random thing could send this market either up or down multiple percent. So like I said, pay attention. Have your notifications on, have your alerts on, trade with your stops. Be careful. If this is not your favorite environment, if you're a little bit too nervous, it is okay not to trade. And if you do trade, I highly recommend being humble enough to be like, hey, I should probably be sizing down. But anyway, the 5-minute actually momentum is bullish, and so is the 10-minute. The 30-minute and the 4-hour are still bearish. The 5-minute and the 10-minute, that momentum is bullish, but the 30 minutes testing down here, that's actually kind of interesting, and the 4-hour is bearish. So I care a little bit more about the 10 and the 30 in an environment like this, so I'm going to be watching those, but obviously you should feel free to do whatever is your favorite. We are in that transitional zone right here that I laid out. Once again, this transitional zone comes from the 0 DTE options market, and basically an idea of where we're actually like legitimately transitioning either from positive to negative or negative to positive on both the GEX, the Gamma, and then DEX, Delta, which are obviously some of the most important Greeks when it comes to the world of options trading. So right here, we have a little bit of this upside gap fill to yesterday's close at 4,982. I would say 5,000 is a huge open interest level for the bulls to recover. And then if we start to crack 4,950, obviously we have a big level down here at not only yesterday's low, but also on top of that, just this huge open interest level all the way at 4,900. For me personally, especially considering how things played out yesterday, I really have no plans whatsoever to be trading early, just because it feels like it's purely gambling and you're just kind of shooting from the hip. So generally, I try to wait those first 10, 20, 30 minutes. Today, I honestly might wait even more because especially at market open, you don't know what kind of volatility or insanity there's going to be. So for me and just like the health, the protection of my portfolio, I'm thinking that it might be smarter than not to, hang on, let's bring up the yield over here. So the yield's been taking a bit of a breather. I'm watching the US 10-year yield. This is what everyone was freaking out about. It gave a little bit back, but if this starts to pump, don't be surprised if the market's starting to come down. There's a lot of people worried about something breaking in the world of fixed income. So you might want to be very, very careful if this starts to get back up to 4.45, or maybe we get a little bit of relief if it drops below 4.3. But I'm watching this 10-year yield. You should probably be watching the dollar. The dollar's been doing interesting things. You should probably watch it, the pairing of USD to the yen, to the yuan. Pay attention to that, because once again this morning people are worried about the yen carry trade blowing up and also the basis trade blowing up. So the TLDR is there's a lot of concern of these very classic hedge fund trades, over levered hedge fund trades blowing up. And if that happens, you don't know who's going to get margin called, you don't know who's going to capitulate, and you don't necessarily know what type of impact that's going to have on the market. But we are at the point where you just got to be careful. I cannot stress that enough. You gotta be careful. Gotta be extraordinarily careful. All right, so let me see if there's any breaking news. Just to show you guys, here, let me switch this up. I haven't traded at all today. Here's my accounts. I just want to show you. They're currently all sitting just below 61,000. It looks like the lowest is 61.7, and then the highest, or 60,700. So basically, in a normal volatility environment, I'd be like, hey, cool, built out the buffer. It's time to rip it. Like I could go back to my normal trading strategy. In this environment, no. I'm still, unfortunately, because of the vol expansion, in the buffer build out phase. So I just wanted to show you this just to prove to you I haven't traded anything yet today. Obviously, if I do trade it, I'll show you it all if it's on stream. I'll give you my thoughts and my reasoning. In the meantime, here's a quick look at the options flow. As of this morning, we got a big pump for the first 4 minutes in the delta. And it was actually people buying, or the longer duration called delta jumped while no one's really touching puts. And that's specific to the S&P 500 complex. Looking at the Mag 7 also going up. So surprise to me, I'll be the first to admit it. I did not expect any enthusiasm out of the gate given the backdrop of the current news. I just think that there's too much uncertainty and you never know what is going to happen. You never know what's going to be said. But as of right now, we are in a situation where the Qs are in the green territory. The Qs are up by 0.4%. The SPY is slightly red. So from just a pure measurement standpoint, we are not, vol's coming down a little bit. VIX got all the way up to 57.50, but it's coming back to 50 right now. I'm just wondering, because remember yesterday, things were looking good until they weren't. And then it got pretty freaking brutal. All right. Apple's been on a tough run of it lately. Let's throw up NVIDIA. What do we have? What's some big movers? MicroStrategy's up 4%. And somehow Apple's holding green, even though we are clearly escalating the trade war, which you think would have a direct impact on all the gadgets, gizmos, and widgets that Apple sells. So calm, cool, collected. Like I said, just if you're joining in right now, a couple major points. Don't panic. If you don't like trading in this environment, easy solution, don't trade. As an investor, these are closer to the times that you want to be buying. Don't get caught into that negative cycle of like selling into the dips. You, if anything, want to be buying into dips. Right now, I laid out these transitional zones for you. Right now, we are in a choppy, indecisive area. Above this is bullish on the 0 DTE. Below this is bearish on the 0 DTE. But giving the overall context, and when I say the overall context, kind of looking at not only the 0 DTE, but looking at the full chain, contextually, we are in a pretty brutal environment, as in the bears are still pretty freaking dominant. So for me today, unless something absurd changes, I think for me personally, the smart move is either you have bearish positions or you do nothing at all. I am not seeing an advantage to try to be the hero and catch the bottom right here. There's just too much external risk. The options market is in no way supportive. Big money is in no way supportive. I cannot stress enough how fucking insane this fixed income situation is right now. This is not, in my opinion, and hey, I'm not clairvoyant. I don't have a crystal ball. I can't tell you what's going on. This does not seem like the time to be the hero and catch the bottom. I think there's still just like a lot of uncertainty, high volatility, just a lot of people not knowing what the hell is going on. It just doesn't make sense to me. But hey, maybe you're seeing something different, and I'm not in control of your money, so do whatever you want. But I mean, even this, like, look how much we're moving in just like little time increments. I could go all the way down to the 15-second chart, and 70 to 60 in 30 seconds, 45 seconds. Like, we're just, these ranges are so brutal, so incredibly brutal. So calm, cool, collected. Look for those opportunities where you can get in with minimal baby risk, but then have the discipline to actually stick to it and be like, you just, right now, it's people who can be humble enough to admit when they're wrong that you're going to survive this. Trump is saying something right now. Hang on, let me see if I can find some of this news. Trump, this is a great time to buy. I don't know. Traders now see June, not May, as a likely start for Fed rate cuts. The market on open imbalance was negative on the S&P 500, but positive on the NASDAQ. So we're getting a weird pump right now because Trump literally just said this is a great time to buy. But then he said this is a great time to buy and added DJT. I don't necessarily agree with the market popping off of that news because it sounds like he's literally trying to pump his own stock. So I know that that's a sizable pump, but it doesn't seem to have any basis in reality. And if anything, we are just coming up to, we're still just in this transition zone. Maybe things stabilize and calm down if we can get above and hold above 5,000. But until I see that happen, this is the transition zone. And then I fear that things are going to get worse if we break below and hold below 4,950. So we're here. We're just chilling at this. Remember, be careful about having recency bias. There's a lot of active traders, especially in the retail space, that whatever's recently happening, they believe it's going to continue to happen. So even something like this, we have 1 minute of a pop. So people are like, I got to chase it. And then they buy out of the money YOLO calls, not realizing that the VIX is going to crush them. And you, like, this is actually probably the worst time to buy deep out of the money calls, because even if you're right and this is the bottom and the market pops, you're still going to be wrong because you're going to get vol crushed. So there is a a time and place to use all of these tools in the derivatives market, the futures market, like complex option strategies, like that type of stuff. But you have to know when to use it. And right now, once again, coming back to the context of the situation, if you're like, nope, this is the bottom, I'm buying deep out of the money calls, you're doing it at too high of a price. Even if you're right and the price goes up, that means the VIX is going to fall. If VIX falls, you're going to be losing a lot of your extrinsic value from vol crush. And inherently, if you're right in price, you're still going to be wrong on the bet. Buying out of the, like deep out of the money calls right now, mathematically is one of the dumbest things you could possibly do, because if you're right and price goes up, you're going to be wrong because vol's going to get crushed. It's referred to as IV crush. And as soon as you do it 1, 2, 3 times, you're going to realize that you should never do that again. So if you have a bullish idea, like there's just better ways to express that. You could go long in the futures market. You could do a call debit spread. You could sell puts. You could sell a put credit, a put credit spread. You can play, I guess, if you want, at the money calls and just pray that you get enough intrinsic value added. But all of that would be completely different than if you're bearish and you want puts. Well, even that, you're still betting on vol expanding, and we are at a pretty high vol level. But if you think that there's going to be a catastrophic breakdown, well, yeah, then vol would still expand. So you could do those deep out of the money YOLO puts. It's just completely different of how volatility plays in this particular situation. How it plays in with this situation. So please be careful. But you... In high vol environments, you should not be treating buying calls and buying puts as the same thing, because it's not. The way volatility reacts in those two situations is going to be completely different. All right, we're seeing some sort of a pop. We are just like that, 30 points above this zone, which is insane. But I'm still not doing squat. 5 minute, 10 minute. If you care about technicals today, they are above the EMA. Even the 30 minutes trying to show some strength. We're pretty much at the high that we saw at 3 p.m. Same thing on the Nasdaq, 5 minute, 10 minute, 30 minute, trying to break out of this 3:30 a.m. Sorry, I said p.m. before. Trying to break there. 4 hours still bearish. I'm just waiting. I'm not sold on anything. I'm much more in the environment of like prove it to me than anything else. Wow, the Mag 7. We are seeing some aggressive call delta movement. The call delta and the put delta are both ripping to the upside in the Mag 7. And then in the S&P 500, the call delta had a good push up until about 940. The put delta didn't really know what to do, and then at 940 actually started trending up. Then that right when the put delta started trending up, the call delta started trending down. So the Mag 7, just from market open till now, the options market, that is clearly bullish. Like undeniably, that is bullish from market open till now, especially up until 942. The Mag 7, the combination of Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla, that was bullish without a doubt. But then looking at the S&P 500, kind of, I mean, it is from open till now, clearly the linear regression would be to the upside, a bit more choppy. And then when you break it up between calls and puts, it's a bit more confusing. But some of these puts are being closed out, maybe people that swung puts overnight. And just like that, we have now fallen 15 points. Like we're just moving these gigantic ranges. That's insane. Absolutely insane. Absolutely insane. Name of the day, calm, cool, collected. All right. If yesterday was a teacher by any means, just because we're a bit green now doesn't mean we can't end horrifically red, because that's literally what happened yesterday. It also doesn't mean that we can't have like a face-ripping rally to the upside, because we're all very much in negative gamma. When you see this much negative gamma, here, let me see if I could update this. It just means price is slippery. I see a sticky node at 5,140. There's quite a few sold puts there, 5,130. And then I see some positive gamma on the bottom. So this is where price might slow down, this zone up here later in the day, or this zone down here at any point in the day. But other than that, whatever way we get going, we could really get going. That's what all this negative gamma means. It's not bullish or bearish. It just means when you get pushing, you can really get pushing. And it just has to do with like really the structure of all the gamma. Yeah, that's all your positive gamma. We have some negative gamma, 4,900. man, that could really speed things up. If we start to go down and we break on the bottom, we see how we got sucked right back into this transition zone. I guess options. The option structure is having more influence today out of the gate than I thought it would. I thought we would see the options influence maybe a little bit later. I just thought there would be so much news-driven volatility. But look at that. It tried to break, got smacked. We came right back in here. If we create a higher low, yeah, maybe that's something to play off of and your risk is the recent low. That's totally possible. But on the flip side, inherently a failed breakout by definition has to be bearish. So just be careful about this red-green test. If that fails, I'd be looking at not only the intraday low, but the bottom of this transition zone. Remember, transition, not necessarily bullish or bearish. When we're in here, that's no man's land. That is just like, you got to be patient. Are you above it? Are you below it? The fact that we try to get out of it and then quickly got sucked back in, not so good for the bull camp, but they do have a chance to save themselves at this green to red move. This commonly acts as a support. Once again, this is where we closed out yesterday. A lot of traders like to trade around that level, so pay attention to that. Pay attention to that. I'm seeing way more stability in the market than I thought I would today. Like way more stability. All right. Maybe the first thing to watch is, and it's tough because we're on the 1 minute with such a high vol environment. I'm watching this green to red move at 496.48 on the SPY and 416.06 on the Qs. The Qs on a relative basis are doing better. The Qs are up 0.7% while the SPY is up 0.1. So just comparing these from yesterday's close to this exact moment, the Qs are showing a bit more strength. But obviously, I'm going to be watching this green to red move to see if there is support and buyers there. And then also, it just looks like we have a little bit of an upswing today. We, on the 1 minute, as of right now, have higher highs and higher lows. So I'm curious if this structure is going to hold. Are we going to continue in the 1 minute with higher highs, higher lows, or is this sell-off going to start to snap the trend line and snap some of these recent lows? I guess at this point, I should mark out the intraday low just because if we take that out, that means that this first 12 minutes was just a bunch of hogwash, a bunch of nothing. So I'm going to remind you guys a gazillion times because I can see it on the internet. I can see it in chat. People are tense. And the way to be successful is to don't be a silly goose. Folks, as a person who has a PhD from Silly Goose University, I can spot a silly goose a mile away. And right now, the silly geese are the people who are panicking, just doing things like firing from the hip. They're not like approaching this in a methodical, calm way. And that's what you have to do to win out here. I'm kidding. I don't have a PhD. I only have a master's from Silly Goose University. I'm telling you, I unfortunately only have a master's. I'm sorry for lying. I know many of you are like, wow, he's a doctor. He's a doctor. And unfortunately, I'm not. Just a master's degree. The panic and penguins. The fact that we're terraforming Penguin Island or whatever the hell it is so funny. Too funny. All right, we are quickly giving that pump. This is that Trump pump of this is a great time to buy. But I want to be clear. He wasn't talking about the market. He was talking about his own stock. This is a great time to buy DJT. Does he mean sign Donald J. Trump? Does he mean ticker symbol DJT? Who knows? It's open for interpretation. But as soon as this came out at 9:37, ask yourself, where did the market pump? Well, pretty much 9:37. 1 minute later, 9:38, we get a pump. That little just update is why, for some reason, the market's like, cool. Yeah, he's telling us to buy right now. And if you ask me, I think that's a little bit of a unnecessary bullish overreaction to a update from the president that literally means nothing. Literally means nothing. But yep, the market had a very real reaction to it. And at the end of the day, price is king. So you might be like, that reaction was make sense or it was bullshit, but it doesn't matter because it's the actual price reaction that either makes or loses you money. So that's what actually matters. So whether you agree with it, whether you disagree with it, whether it makes sense, whether it doesn't make sense, whether it's the complete opposite or whether it's completely random, the way you either make or lose money is by price either going in your favor or not going in your favor. So as silly as that pump was, as comically silly as that pump was, we pumped 1.56% off of nothing. off a nothing. That was an absolute nothing burger. So just be careful. As of right now, 9:47, we are successfully putting in a higher low. So we, as of now, are continuing with this trend of higher highs and higher lows. But just now be careful, because that's another low that if we break it, we would officially switch from higher highs and higher lows to lower highs and lower lows. So kind of watching whatever this dip is. Out of the gate, I want to be clear, out of the gate from 9:30 to this moment, the bulls are in control. You can see it in price structure with those higher highs and the higher lows. Those are marked out with these green and red triangles. So once again, exclusively from 9:30 to this moment, price structure, obviously bullish. If you look at options flow, which we were having a hard time update. We were bullish up until about 9:41 on the SPY. Then we were going flat. The Mag 7 was very bullish this morning. Let's see if it's turned at all. No, it hasn't. The options flow in the Mag 7 is very bullish. Once again, we are not seeing that in the S&P 500, which is interesting because the Mag 7 makes up about 30% of the S&P 500. So it's always interesting when there's such a clear disparity. The SPY has stopped moving while the Mag 7, for whatever reason, there's way more optimism. I'm seeing the call delta pump. I'm seeing the put delta pump. I don't know what they are looking at, but they have some serious balls. They have some serious balls to be playing that. But anyway, you see price structure from market open till now, just talking about like literally from 9:30 to this moment. Price structure is bullish. Options flow is bullish on the Mag 7, neutral on the S&P 500. And then looking at momentum, the 5-minute, 10-minute, and 30-minute. The 30-minute, the fact that that's up there is interesting. That's all bullish. 5-minute, 10-minute, bullish. 30-minute also trying to break out, but we have about 8 minutes to go until the candle actually closes. So, I guess for me, my major watch right now would be this intraday high or the market either pushing the intraday high on the SPY and the Qs or it coming back and breaking not only below the 947 low, but also this trend line. That would be a sign of a reversal, but I want to be clear right now, and we're not even 30 minutes into the day, the bulls surprisingly showing up. 5-minute, 10-minute, 5-minute, 10-minute. We are holding this 5,000. 5,000 is very, very important. If this does get going, I just want to call out that the interesting level would be 5,130. So if this gets going, there's another 100 plus points that would be like literally my next level, 5,130. There might be a reaction at 5,100. So maybe I do two targets there. If we get pumping, 5,100 followed by 5,130. Obviously 5,100, it is a key open interest level. More importantly, it's a key psychological level. A lot of people like playing those 100 point rungs. But today, as I just showed you with the gamma texture, there is quite a bit of positive gamma, 30 points above that. So I'd watch 5,100, then I'd watch 5,130. Once again, buying calls to that level is not the way to play it. There are better, more shrewd ways. If you want to express that trade, buying calls out of the money, especially deep out of the money, 0 DTE calls is not the way to do it. Because if you're right and we start to pump, you're going to see vol crush and you're probably not going to make money anyway. So I'm not saying that plays the wrong play in terms of like that bull thesis. I'm saying the way in which you execute it is going to be very important, and buying out of the money calls is not the way to do it. That out of what's available to you between futures, selling puts, call debit spreads, put credit spreads, at the money calls. The out of the money 0 DT call is the dumbest thing you could do. It is the dumbest thing you could do. Short the VIX. Do you know how many people have blown up trying to short the VIX and they just do it at the wrong time? It sounds really easy in hindsight. And in reality, it is incredibly difficult. So as much as you might want to say short the VIX, people thought the VIX was high at 30. People thought the VIX was high at 40. People thought the VIX was high at 50. Just to arbitrarily say it when it goes up, okay, what level? There are many, many people who've blown out their accounts trying to take that quote unquote easy trade of short the VIX. There's many, many people who've blown out trying to pull that trade off. Plus, they're expensive right now. Well, yeah, they're expensive because the VIX is high. Something being cheap or expensive with respect to options premium has to do with the volatility of the underlying. And if the volatility is higher, it becomes more expensive. That's one and the same. Hey, Matt, if NVIDIA can get over 100 and hold, what do you see is going on from there possibly? What does your degen trader theory say? Dude, no individual equity matters right now. We are seeing a historic event in the entire market. I'm not expecting some giant blue chip stock to be like doing something wildly different than the market. No, like, folks, you got to have a better context for like what the hell's going on right now. This is not a normal day, week, month, or just environment in the market. So if I see NVIDIA go to 100, okay, it's at 100. What? Like NVIDIA could easily gain or lose $10 from here today or more. Like that's just the volatility of this environment. So just saying, oh, NVIDIA at 100, okay. It could literally be at 80 tomorrow. It could also be at 120 tomorrow. It's just your focus should be what's going on in the full backdrop. This is a time, who gives a shit about individual equities right now? To have an idea, no individual equity is somehow going to be like a major outperformer in the market if the market is actually crashing. It's just not going to happen. So those are the questions and the things you consider when you think that the actual market is stabilized. But I don't think that, like, do you guys think that the overall market is actually stabilized right now? I find that one a little bit difficult to believe. I will consider all that stuff, and those are fair questions to ask. It's just ask it when like there's utility to asking it. Like this is just, it's really tough to judge what Microsoft, Apple, Nvidia, Palantir, Meta, when an update today, tomorrow, at a random announcement could send these things sky high. It could also send them like really, really low and just cause them to get absolutely pummeled. That's the environment you're in. It's like that's kind of a technical thing, or a key psychological price. Like, are we above or below? Whatever, 100, or you could use that with any equity at any key level. It doesn't matter because it's such a news driven thing right now that if you capture a cool level, if you don't, if you get rejected, whatever. But then in 1 minute from that moment, you could get a huge update that sends it even more, or like I said, causes it to crash. Like we are. To go back to making good, sound, technical, reasonable decisions, you have to first wait for the news cycle to kind of play out. Just wait. Just wait. Like right now, it's exclusively firing from the hip. If you choose to buy right now, obviously, I wish you the best of luck, and I hope you're finding the bottom. I don't want anyone to lose money. But also, you have to appreciate the risk. You're taking on quite a bit of risk of the unknown. There is a chance that the trade war ends today. And if you bought today and it gets announced that we're ending, you bottom ticket and you're making a shitload of money. Congrats to you. There's also a chance, we don't know, it's a non-zero probability that this trade war lasts for months and things get really bad. And before you know it, the market has a 30, 40, 50% sell-off. Like, you just don't know. And you have to admit to yourself what you don't know. Oh, what is this one? This is an interesting update. Come on, faster. China issues a risk alert for Chinese tourists traveling to the US. Jesus. Well, that's interesting. Recession risk spikes to 68% on Kohrs. So there's a 2/3 chance that we actually are going into a recession this year, this calendar year. Honestly, given this crap, I'm kind of surprised it's not a little bit higher. Right now, market's trying to decide. We have successfully put in higher highs and higher lows, but right here, is it saying, does it want to keep going? Or are we going to put in our first lower high of the day and start taking out some of these recent lows? Basically, price action stalled out at 952, 953, and right now it's very indecisive. Not strong enough to make a fresh high and continue with the evident trend, but also not weak enough to actually break down and start taking out some of these recent lows. So incredibly indecisive. Trump says, be cool. This is a great time to buy. Yeah, man, just be cool. You just got to be cool.
It's in just the last few minutes. China coming out with these headlines saying it's the next step in the trade war. It's going to be imposing retaliatory tariffs of 84% on U.S. goods. That starts on April 10th. As a result, the futures sold off. You can take a look if a tick by tick. The Dow futures are now down by about
Look at all these puts.
Points. S&P futures are off by 73. The NASDAQ down by close to 200 points.
Something
again, on a percentage basis, you are now talking about drops of 1.8% for the Dow, 1% for the NASDAQ, and 1.5%.
Which way is this going to break?
500. It's playing out in Europe, European equities as well. Take a look at those prices. A little weaker than we were before this. We were down by about 3% for most of the major averages at this point.
Random pop.
The German
SPY,
DAX
Qs,
is down
something.
by 3.8%.
Was something just announced?
Italian stocks.
U.S. wholesales month over month
2.4.
2.4. Wholesale inventories
0.75%, and then the FTSE is down by about 3.4.
Hang on, something's going on right now. What's the news? We're seeing when there's news first in price, because price is going to react, and then eventually someone reports it, and then we get an update. But something just popped. It might be off the U.S. wholesales month over month, 2.4%, while the forecast was 0.8. Inventories month over month revenue, the forecast was 0.4. We came in at 0.30. Generally, you're not seeing wholesale inventories have that much of an impact on the market. So maybe it was that, maybe it wasn't. Maybe there was just a random alignment between someone deciding to trade and that coming out. But that's the only news I'm currently seeing hit the wire. I thought it would be something else. I thought it would be something more exciting. We did make a fresh high on both the SPY and the Qs on that pump, really at the turn of the hour. Speaking of that, we just got the opening range breakout. If you're using the 30-minute, obviously the 50-minute also broke to the upside. Is it going to keep going? We're chilling. We're right at 5,046. We are holding above this transitional zone. I thought right here it looked a little bit sketchy where we were going to get pulled back into it, but as of now, it's holding. It doesn't mean it's going to, but all I can comment on is literally what we're seeing in real time. So that little pop didn't have much of a follow through, at least as of now. Literally, I say that, and then it flashes a little bit green. Right at 10. Everything got a little bit of a pop. Tesla, Nvidia, the SPY, the Qs, right at the turn of the hour. But it didn't necessarily seem to be options driven. Looking at the it was. Never mind, scratch that. Just after 10, you see a spike right here in call delta and in put delta. So kind of the double whammy, but I could zoom in right here at 10 a.m. and 30 seconds. 30 seconds past the new hour, there was quite the spike in the Mag 7 delta. And then looking at the S&P 500, same time at that 10:30 spike, we're seeing the same thing right here. I'll zoom in. You could see there was like a run up in puts. The put delta ripping this high is really confusing to me. Really confusing. Remember, put delta can go up by people. It goes up by people selling puts. So they could be getting out of a position that they were long or creating a new position to kind of put a floor in the market. But the put delta is just writ like this longer duration put shit all the way. I mean, it kind of started at 9:38. And then we just had 22 minutes of the longer duration put delta, just nonstop pump and pump and pump, which once again is from selling puts. It doesn't necessarily tell you if they're selling it to open the position or selling it to close the position. They could be closing out long puts or creating, obviously, like just a short leg. It could be a combo of the both, but just seeing that delta pump. We're seeing both deltas pump. Mag 7 delta pump till is still just literally hitting a high. Both of these clocking highs at 10:03. Both of these clocking highs. All right, so let's remark it. Let's mark out the new highs, and let's mark out the new swing lows. Let's mark it. Mark it. VIX is at 49, so it's down about 5.9%. But let's see. Hang on, I want to redraw this. Okay, my redrawing is not going as well as I wanted it to. All right. Watching this new trend line just to see, once again, just trying to get a better understanding of the like right here, I think we could all agree the price structure is higher highs, higher lows. Bulls are in control. Same thing on the Qs, higher highs, higher lows. Why is this off? You can see it there. Higher highs, higher lows. The price structure from market open till this moment is, as of now, bullish. Looking at the options flow, pretty much the same thing. The Mag 7, which is much more related to the NASDAQ and really the SPY, but it is the combo of these 7 names. Obviously, bottom left, top right, the overall trend is up. The S&P 500, same thing. Kind of sketchy up until 951, and then the longer duration kept going. But I do want to call out that the 0DT on the S&P 500 is not going up. That is a bit of a tell to me that something's a little bit mismatched. Looking at price momentum, 5-minute, 10-minute, 30-minute bullish, 5-minute, 10-minute, 30-minute bullish on price momentum. So I'm calling that out. And yeah, it's a little bit of technicals. It's a little bit of options flow. But I do want to kindly remind you that it can completely be reverted. And that's exactly what we saw yesterday. This is a look at the flow from yesterday. Up until about 10:20. Look at that. I'd be saying the same thing. Like literally, this is just yesterday's chart. Price was bullish, higher highs, higher lows. Options flow, bullish. Price momentum, bullish. Actually, it was even more bullish. And then guess what happened? Around 10:22, it completely changed and just got murked. Now, I'm not saying that that's going to happen, but I'm saying you can't discount that. There is some non-zero probability that that is where we're going. It's a non-zero probability pathway. So I just want to remind you, things can look strong until they aren't. Things can look weak until they aren't. And I know my more veteran traders, you're saying, no shit, Sherlock. But I do find environments like this, it's good to remind people. And it looks like we actually might be snapping this trend line now. Golly. All right. So we made fresh highs, but now we're making fresh lows. So we're getting a little bit more of a broadening pattern, which I think is the worst pattern to trade because you get these highs, but now you're getting fresh lows relative to these recent swing lows. So that's not so good. And we might be getting a trend line breakdown. More importantly, it looks like we're getting sucked back into this transition zone. Maybe the top of the transition zone, because it's also a key level, might act as support. Watch this. We could easily bounce off of it. But if we don't, we're sucked back in here, and then maybe we're going to be watching this 947 low, which is also the green to red move. That's what you should be watching, but we've seen clear reversals before, so don't get caught up in that. That's why I find trading early is generally not a good thing, and then especially in things like environments like this, I just find no advantage to trading early. Absolutely no advantage. Hang for the 5 minutes at 10:20. All right, we're seeing it. We're seeing a potential reversal. I know that I've kind of like a fire hose given you guys quite a bit of info today. Are there any questions, comments, concerns, confusion? Is there anything that I can, I guess, clarify? And I know there's a little bit of a delay between what I'm saying and between what you guys are saying. So let me remind you a quick special shout out to today's stream sponsor, Take Profit Trader. If you want to trade with someone else's money, that's exactly what I do when I'm trading the futures over here. Currently, the best deal in the market is from Take Profit Trader. In my humble opinion, use that code Goonie to not only get 30% off, but in the event that you pass the test and want to get upgraded from an eval account to a performance account, there's no activation fee. Pinned to the top of chat in the description of the video. But the key thing is when you're checking out, there's a coupon code section. Make sure you put in that code Goonie. It's not going to be auto-generated. You have to type in Goonie. So just want to call that out. Matt, get the magnet out. Thank you for letting me know she's the way, CJ. I love how Matt asks for questions and never looks back at chat. Where do babies come from? Storks. You've been very transparent, bro. You've been very transparent. What about XRP? I don't give a fuck about XRP right now. How is your cat, dude? She's awesome. Do you have any thoughts on how this is affecting oil and copper futures? Yeah, oil especially down. Matt, are you buying any bonds? Not at the moment. There's no reason for NVIDIA going up. It's going up because the SPY and the Qs are going up. The overall market's getting a bit of relief from today's open till now. But we're only it's 10:10. We're only 40 minutes into the day. Flow alert on HYG. That is not good. Put Delta. HYG is corporate bonds. Why is this not coming up? The credit market. Oh man. right here, HYG is high yield corporate bonds. If you see this going down, corporate bond, like that's not good. This going down, if credit starts to crack, are yields going back up? Come on, you got to load fast. Yields are maybe ticking a little bit up. Here's the 5 minute. So pre-market from 9 a.m. to 9:45, 45 minutes, yields were coming down. We're seeing a little bit of an uptick. Maybe it's a fake out, but if this really starts to go, just be careful. How's the dollar looking? The dollar starting to climb back up. It's been on this trajectory back up. Interesting. How's gold doing? How's the flight to safety? Gold's holding out pretty high right now. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Okay, maybe a little bit of support found right here, right on top of that transition zone. We are still successfully, we took out these lows, but you could say on like even maybe going to like the 3 minute or something, that it's still generally higher highs and higher lows. Like the general slope of today's price action is higher. So finding a little bit of support right at the top of the transition zone, also a massively important psychological level of 5,000, also a massively important open interest level. There's a lot of people playing that strike price contract for the 0DT and the all expiration. So obviously we're getting a bit of a bounce at support. The question here is how much of a bounce? Is it going to be a dead cat bounce and we all of a sudden have a shoulder, head, shoulder, and we crater back into this? Or is it just a higher low and we're going to bounce all the way up? That's what this could be bullish. It could be bearish. Whenever you come to key levels like this, I find it's kind of a waste of everyone's time and your capital to try to predict bounce or break. You just wait for the reaction and play it accordingly. Like if you're like, nope, we're bouncing out, cool. You're playing the bounce. You have well-defined risk and best of luck. If this bounces and you start to see it fall over and you're like, nope, that's a lower high and we come down. And once again, the recent swing high, that's your risk. It's all about just what is your reasonable risk? What is your reward? Just because something is trending in one direction or another doesn't mean it's a worthwhile trade because your risk might be too large. Not only are you attempting to identify a trend or a mean reversion opportunity or an arbitrage opportunity, there might be good opportunities in terms of like, it might be glaring to you that we're either doing something or we're not. But a key thing there is what is your risk? Like if you were to trade right at that exact moment, is there a risk? Is the risk being presented something you're willing to accept? If you're not willing to accept it, don't take the trade. There's a lot of things that, for example, might be like seemingly very bullish or very bearish or something like that. And then I'll still not take it just because even if I were to take it, the risk is just too far away. Definitely a bit of a transition here. What do we have going on in the flow? Mag 7 is now flat. So Mag 7 ripped till 10:03. So we basically had the first half hour of the day. Since then, it's looking a little bit lethargic. Same thing with the SPY. Do I want to take my first stab of the day here? All right.
Order submitted.
I'm wondering if we're going to puke back in. And kind of like I just explained to you, this is my risk. I'm short at 18. I'm risking 82. If it snaps this recent low at whatever this is, 366, I'll move my stop to break even, and then I have a free lotto ticket play. Free lotto ticket play. And there's a high chance that it comes back and just stops me out for break even, but I don't care because it was a free lottery ticket. No one complains when you're handed a free lottery ticket if you do or you don't win. You were just given a lottery ticket and you had a whatever percentage chance of winning. Maybe it's small, but it doesn't matter because it didn't cost you anything. So right now I am taking on risk. Obviously I'm short at 18 and my risk is all the way up here at 82. And it just happens that's the swing high, and it's just the painful nature of the situation that right now your risk is commonly far away, which is why I'm trading only one singular contract. Once again, that comes back to proper sizing, whatnot. But on this break, whatever, I'll go from having risk on in the trade to as soon as this snaps, I'm moving my stop to break even. And maybe it hits, maybe it doesn't. All I can tell you, it's a free lottery ticket. All I could tell you is your boy, and right there, boom. Ooh, I'm trying to put it right there. Stops in. It's that, folks, it's that easy. Calm, cool, collected. I waited. I was patient. It's already 45 minutes into the day. Oh, no. That's not my target. That's not my target. Get away. Sorry. This isn't my real target. I just had the order cancels order on. I want to do more of a trend following thing today. Sorry. A little bit of a panic there. I guess what can I do? 418, 318. 318 would be 2K. 318, so 70. 70, I could do 68, 65. All right, I'm just going to put this there. Like I said, it's a lottery ticket. If it comes up and knocks me out, it knocks me out. But the fact that my stop's at break even means if I'm wrong and it comes back, it's not going to cost me anything. And then if I'm right and we do puke, cool, I might make some good money. This is a little bit more of a sizable bounce than I'd like to see. I mean, granted, we bounced from 33. We just bounced 60, 70 points like it's nothing, but that's just this environment. And when I'm in this crazy environment, I need to be even more on top of my game of moving that stop to break even. In this environment, there's a very, very high odds chance that you're going to get stopped out for break even. You guys saw a lot of this trading yesterday. I think out of like my 4 or 5 trades yesterday, maybe my 6 trades, maybe like 4 of them were break even trades because like just the whip is so large. And like I need to protect myself because you don't know when a random tweet or update's going to come out, and maybe that helps you, but what if it goes the other way and before you know it, you blew out your account? So that's exactly why, more so than normal, I'm being very, very aggressive with that stop, because in the events that you're wrong, you could have to pay a really, really, really big bill. Now, obviously, I'm seeing a little bit of a double top here. I would love, nope, it's going the other way. This one is seemingly going to be a stop out. We're about to find out. Of course, whenever you place a trade, you want to be making money. Of course, like I would much prefer that this just pukes, and I get it. And like, you always have that like internal battle with yourself of like, no, just give it some room. Give it some room. It's going to work. And like, you don't want to get stopped out and miss the play. And that's always a battle. Here, I'm about to get stopped out. Should I just take this? Well, or am I going to get lucky? Is it going to just get rejected at 400? I was kind of praying it would get rejected at 400. It came for me again. It's still. The market's trying to decide if it wants to whip me out or not. Come on. It's this battle at 400 that's a little bit dicey right now. Doesn't want to be above, doesn't want to be below. Yep.
Order
Stopped
canceled.
out. Break even trade. It didn't go my way, but that's okay. I had skin in the game. It didn't cost me anything. And the reason I got out of break even is because in the circumstance that this just really gets going, I would be down right now. And of course it could fall back over and then I have to get a worse fill. And that's like the trade-off, but it's more of the point of right here in environments like this. Well, really all the time, you should just be like really, really paying attention to your risk. Like what's going on in your risk? Are you in control? And this is the best way for me to control it. Knowing my luck, this will pump, it'll start to fall, and then I'm going to get a much worse fill, and I'll have to accept that. But that's the trade-off of here of, well, what if it does pump all the way back up to 82? Did I really want to lose 60 points and start off the day in the whole 1.2K? You know? You just don't know. You don't know what the next bar is going to be, so I think it's better to prepare that like you're not going to get the lucky break. Not gonna, because there is this case that right here, okay, I try to take the trade, it tried to pump. Looks like we're actually back to showing some weakness. And if there's continued weakness, I'll get back in. I'm not gonna have as good of a fill as I did, but I have to take on that risk because in the other situation, what if we just kept going and we take that out? What if this was a little fake out? Some people would refer to it as a liquidity sweep, whatever that is, but basically puncturing the recent low and then boom, we just rip back up. Then my accounts are gone. They're blown out. So, like ideally, I'm just never putting myself in that situation of if it goes wrong, I lose my accounts. Like it comes back to, can you manage the worst case scenario? And for me to do it, it was a break even trade. But guess what? That's fishing, folks. That is fishing. That is fishing. All right. And yeah, a little bit of a pop there. A tiny bit of a pop here, but maybe falling back over. All right, we'll take another stab at it.
Order submitted.
Take another stab at it. We'll see. I don't know. Maybe this is a lower high. Maybe this is a higher low. You don't know. You never know the next bar. You never, ever, 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 ever know the next bar. I saw it. Oh, okay. Maybe we're failing. We broke this EMA. Maybe this is just a lower high. Unfortunately, it looks like it's pumping. We're going to have to see. Yeah, no, that was unfortunate. I just got caught up in that. Come on. Can he get lucky? Can he get lucky? I thought not only price was coming down, but I saw this little hit to the delta, and I was like, okay, cool. It's like a failing bounce right here. I saw this. I was like, okay, we're starting to trend down, but unfortunately, that was actually quickly bought right back up. Not liking this, but that's why my risk is in. That's exactly why my risk is in. Is it about to knock me out? Yes, it's getting very, very close. Come back down. Don't do it. Don't do it. Just come back down. Make me look smart. Give me a little bit of a helping hand. Make me look smart. Hang on, I just saw some news come across the wire. Spain says it defends its interest following U.S. Secretary Besant's comments. Yeah, Spain was talking about like becoming more aligned with China instead of the U.S. Oh shit, it's coming for me. I like that. I thought we were failing. I said pump, drop, but it looks like we had. Oh, am I gonna get lucky? Hey. When it comes to the game of trading, would you rather be skillful or lucky? The answer to that is always lucky. Always lucky. In reality, we're just kind of in this range right now. We haven't really made a fresh high. We haven't really made a fresh low. I tried to catch this puke, but obviously the puke saved itself. Obviously the puke saved itself. I'm very interested in 17,366. That was this recent low at 10.07. And I'm interested in 17,332. That was this recent low. I'm happy that we didn't make that fresh high, because on a fresh high, I would have got knocked out. And right now, I'm almost back to break even. And I'm back to break even right now. Pretty much the same thing. If we see a fresh low, I'll move my stop to break even and convert this risk on trade to a riskless lottery ticket play. Obviously, my first attempt at it right here, it didn't pay off. It just came back and knocked me out. I got in at 10.13. It knocked me out at 10.17. Right here, you could argue, well, if you held, you'd be green. And I would be green. But what about in this pump? What if it just kept going? I could have been horrifically red. So I got to consider that more often. And here, maybe I'll get lucky. He can't keep getting away with this. And yet I do. Come on. I really don't want to see that. Don't hang out at my level. If anything, just hang out at this low so I could feel comfortable. I'd be up 60 points. Like, it always just seems like whatever level I get in, that's the level that the market wants to oscillate around. And maybe that's just how we all feel of like, dude, am I green? Am I red? Am I green? Am I red? Am I green? I'm red. And it never feels like it stalls out and oscillates when I'm nicely in the green. It seems like it always does shit. Fuck. Like this. Green, and then it rips and not, fuck. That's aggressive. Come on, don't hit me. Lucky rabbit's foot. Don't hit me. Shit.
Order
knocked
canceled.
Me out. Fuck me, dude. Well, that's pretty much giving back the gain from yesterday. I think I made 1,400 on each account yesterday. So that's now between yesterday and this trade. Damn, it just got me. Like that. Inverse shoulder, head, shoulder, maybe. Right here. We made roughly that same low at 66. Then there was a quick pump. Maybe. But that's trading, folks. Really, we're just range bound. You could see ever since roughly 10.06, 10.07, just kind of like this choppy range. And we almost broke down 2 separate times, but nope. We pumped up, and now we're maybe almost breaking out. Where are we at on this? Oh, it's saving itself not only at this 5,000 level, but also at this this green to red move. So finding support right at the closing value from yesterday. Also very close by is this 5,000. So just getting choppy. I do want to remind you that is pretty much what happened yesterday. pretty much what happened right here. See how it's similar, except instead of being 5,000 flat, it was 5,250, chop, 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 chop. Then it finally started to break down, and the breakdown actually happened at 10:43. So we pumped, we pulled back, we pumped again, we chopped, we thought we were going to break, things were looking good, and then the train just went off the tracks, and the official breakdown happened somewhere between 9:41, 9:43, and that led to a pretty sizable capitulation. So just because it happened yesterday, obviously that doesn't mean it has to. I'm just pointing out similarities of we keep trying to find support at key levels, and yeah, we're kind of pumping, but then we're also kind of not. So it's a tough one. You could, like, obviously I've been attempting a bearish position. Obviously, one was break even, one just got like my teeth kicked in, which is not ideal. So I've been bearish just because, to me, the fact it looks like we're failing. I'm looking at the flow. It seems like the flow is slowing down, but maybe I'm reading it wrong. The Mag 7 just got a little bit of a pump. The SPY is flat. And really what's concerning about this is that the 0DT isn't doing shit. I find that interesting. Technically, I should enter again. I would really need this one to work.
Order submitted.
All right, we're in again. Of course, I do it. And bottom ticket. As much as you guys might complain that I get absurdly lucky, I would focus more on the opportunities where I get absurdly unlucky. Literally just bottom tick that. And I was trying to play, once again, this failure of the EMA, thinking, okay, fake out breakdown. We're going to come down and test the trend line. If we bounce off of that, I'd get out early. But nope, literally just a bottom tick. A bottom tick, a bottom tick. Hang on. I need to do a little bit back of the napkin math right now. Well, that doesn't seem right. We'll see. Like I said, I don't necessarily care about that profit. I care more about this stop, and I just want to aggressively move it back to break even. Thus far, one scratch trade just stopped out at my entry price. The second one was a pretty considerable loss of about 1,800, which is about 90 points. That was this trade right here, where it went in my favor, looked like good, and then quickly ripped against me. Unfortunately, it was seemingly a fake out breakout because we made these fresh highs. I got knocked. And if I held, I would actually be back to break even right now, and I wouldn't be down the $1,800. So that's a bummer. But it happens. And as much as that's like a frustrating thing, and I guess I'm saying this over and over again because, like, folks, I'm right there with you. Of course you think, damn, like, why did I not just hold? Like, if I just held through it, it would have been fine. But what about the other situation where it actually just picks up and keeps going and you just get your teeth kicked in? That's how you blow out your accounts. So even if there's like a 10% chance that happens, well, if you do it enough, eventually you're going to get to that situation where you blow out your accounts and the game's over. So you kind of are forced to do the trade where, all right, you just got to take the hit, and it's unfortunate and no one wants to do it. It is what it is. But right now, we got this puke. Since then, little pump up, little push down, little pump up, little push down. We're getting this first trend line test. Maybe it matters, maybe it doesn't. It's just kind of a weird little intraday trend line I'm paying attention to. Obviously, I care a bit more about this low. 17,332. But this is now the third time we're finding support at the 60s. We found support here at 07, again at 22, again here at 28. This is now the third time that this level has been respected. Bounce, bounce, bounce. And even the time that we overshot it, it wasn't by much. And then we just quickly bounced. So there's clearly some bullishness, or at least lack of bearishness, right in this zone. I mean, we're just bouncing like nothing. I was hoping that the fourth test was the charm right here, that we would actually crack it, but obviously that didn't occur. And we didn't go down far enough for me to move my stop to break even because that was just barely. But maybe I should have. Maybe I should have. Dude, is this just going to come and stop loss hunt me again? Oh, brother. Oh, brother. Oh, yeah. Look how choppy this is. It's so evident on the 1 minute. Like, look at that. Just chop, chop, chop. Market has no idea what it wants to do. Chop, 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 chop. Chop, 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 chop. Chop, 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 chop. Maybe we can make a little bit more sense of this on the 3. Yeah. I mean, you could see it even better that since 10:06, just nothing. Unfortunately, just nothing, which maybe I should count my lucky stars and say nothing is better than it ripping against me. So I guess beggars can't really be choosers in this particular circumstance. Beggars cannot be choosers. We're just chopping. That's our zone. We're just we had some decent bullish movement from market open till about just the turn of the hour. And then at the turn of the hour, there was a bit of bearishness, but not much. And then we just got stuck in that. And we are literally just hanging out. Look how many times we're testing this. Are we breaking or are we not? Are we breaking or are we not? Right. Oh, fuck. This is... I just keep getting wicked out. Knowing my luck, it's going to get wicked out. Fuck. SPY taking out the high potentially on the top side of its range right now. Q's right there. Will there be follow through? Maybe we could get some indication from the options flow right here. Mag 7 just got a nice ramp. So I try to play this because at one point, wow, looks like it's turning. Looks like it's getting murked. Nope. Surprise, surprise. We just rip it higher. Just rip it higher. And then looking at even this. SPY looking unhealthy at 10:28. Boom. Surprise, surprise. We rip higher. Like, it's not easy. It is definitely not easy whatsoever. Not easy. Patience, patience, patience. Patience, patience, patience. SPY trying to show some life up here. Is there news coming across right now? We're definitely seeing this like coordinated pump across the market. I don't know if it's a reaction to an update. Greer's talking. I've had a number of conversations with my UK trade counterpart. That's Greer, the US trade rep. US Treasury Secretary imposes sanctions on, nuclear, breaking EIA crude oil inventories, 2.55. What the fuck, dude? What is happening? Potential range breakout. I'm saying potential because, yeah, we're on top, but not by much. Not by much. Is it going to just come back here? I mean, that was a SPX went from 4,990 to 30. That's a 40-point pump in about 4 to 5 minutes. That talk about range, talk about craziness. Yeah, you could call this a double, triple bottom bounce, and that would be true if we keep going. And then if this fails, everyone's going to say, dude, evidently it was a shoulder, head, shoulder. That's the one thing about technicals is that like at any given point, you could find like a setup that would argue bullish or bearish. And then people love to Monday morning quarterback and they cherry pick and be like, yeah, it was so obvious. But right now, based on the data you have in real time, this is very obviously, you could argue it as both. And that's pretty much always going to be true. You could say, yes, I see higher highs, higher lows. I see 1, 2, 3, a quad bottom bounce and the breakout, and I'm risking that. Okay, cool. And if it keeps going and we make a new intraday high, you're going to seem right and be like, yeah, no, that's why I play triple bottoms off of key levels. On the flip side, if this fails and pukes, and then we have a day just like we did yesterday, you're going to say so obviously, shoulder, head, shoulder. Of course it was bearish. Well, like, what are you doing? Like, and that's like one of the frustrating things I find about how people want to teach technicals is they are always continually Monday morning quarterbacking and cherry picking examples that fit exactly what they're trying to show, when looking at it as it plays out, when you already know where it's going to go, is completely different than trading it in real time. Like, it's just, oh, and then that's actually, and we're also moving sideways. That's true. If you go do something like the 5 minute, you'd be like, dude, we've gone nowhere. So like, that's another fair technical observation. Like, none of them are necessarily mutually exclusive. Like, they're all just inherently true. So then if they're all inherently true, you have to ask yourself, what form of predictive power do they really have? And that's why I would argue the best thing about technicals is kind of giving you a very evident risk points. And effectively, it always just comes back to the recent swing highs and swing lows. So if anything, I'm not saying I don't like technicals. I'm saying know when to use technicals. And I would take the position that technicals are best used for what is your risk point. Technicals don't have any predictive power in all reality, just because, remember, technicals are created by things like the price action that's already happened. It's not a forward-looking mechanism. Technicals, by definition, are just telling you what happened in history all the way up to right now. It's inherently always backwards looking. So I'm not against it. I'm just saying, like, know the limitations of what you're using. And, dude, if it keeps going, everyone's going to be like, dude, that was so obviously triple bottom buy. And then if it cracks, everyone's going to be like, dude, how did you not see that, like, head and shoulders? Completely different setups, completely different, I guess, directional bets, and yet they're both true right now. And now we're still just going nowhere. And we're right back into that range. So, fake out, breakout, apparently. But that is interesting enough to me that if we take out that trend line, that might be a good bullish trade. So I'll be watching that just because maybe we, I don't know, do some sort of like retest of 5,000 bounce. So this is that new trend line that I'm watching. So clearly we kind of put in these fresh highs, but overall it's fresh lows. And what do we have here? I guess I'm watching this pennant. If you need technicals, once again, using technicals for the risk points to base your trades off of. We have this lower high. We have these higher lows, consolidation pattern. So it's just, I'm waiting for that break, and you could risk the recent low, or the breakdown, and you could risk the recent high. And then other than that, if you're already in a position, Godspeed. I hope you're praying hard. And if you're not, patience. Risk return wise, the play is head and shoulders. How do you know that? How do you know the reward on a triple bottom breakout? I mean, maybe you do. I don't know it off the top of my head. But I know the head and shoulders, there's been some studies on various technical patterns, and the head and shoulders is one of the most accurate technical patterns. But the key to it is you don't take the play until the neckline breakdown, which today happens to roughly be the green to red move. So shoulder, head, shoulder, and the trade is at the neckline breakdown. And then your target is the distance from the neckline to the top of the head. So basically, that's 82, that's 52. Jesus Christ, that's 70 points. So if you did that, the measured move would be down just above 4,900. But that is like, if you get really specific, or at least that's how the studies I've seen have been played out. I am surprisingly back to break even, or I was for a second there. As you can see, I took on a lot of risk. You could say, Matt, why didn't you get stopped out there? Because I didn't want to, because I thought that bounce was bullshit, but maybe I should have. I don't know. I guess I got a little bit lucky because it did just capitulate all the way effectively back down to my entry level, and it's literally bouncing off my price as if the market gods are taunting me. As if the market gods are taunting me. But we'll see. I'm just basically watching this test of 5,000, which is getting even more interesting because now 5,000 is aligning with this upsloping trend line. And in between 5,000 and the green to red move is that. So we have a key psychological level, a key options level. We have a key intraday trend line. And then we have obviously the people reacting to the green to red move. This is all in this bullshit, which is why we've bounced 1, 2, 3, 4, 5 distinct times today. I would say the sentiment of the day has clearly changed if we take out 4975, and then your confirmation of that is if we break to the south side of this transition zone. Oh, well, we'll see. We'll see. Here's the options flow. Mag 7. After hitting a delta high, we've been drifting down since 1036. S&P 500 tried to recover up till 1033, went flat, giving a little bit of it back. Now, we were testing this. I don't know if it's going to bounce or not. To try to predict a bounce or a breakdown, that's a silly thing. Just flip a quarter. That's how lucky you're going to be at bounces or like predicting breakouts or breakdowns. It could be a fake out and we could just bounce out of here, or we could be legitimately breaking down. All I could tell you is the way to really handle it is just to identify the key levels, which we've done. We've already bounced here, like I said, 5 times. And you just watch and you say, okay, is the momentum picking up to break out? Is the momentum picking up to break down, or is the trade reversing? And that's actually like a reasonable like low to play a long position off of. Hang on. I'm getting more stuff from the trade rep Greer. It's not clear yet whether farmer bailout is necessary. Trump wants to bring back pharmaceutical tariffs back to the U.S. Okay. We're right at this level. So we're right back in this range. Nothing's really happened. I'm seeing a lot of individual equities not do the most. VIX is picking up though. That is more bearish. I didn't notice that the VIX got back above 50. Be careful, and also be specifically careful if we take out 5136, which is the swing high at 1013. But we try to get out of no man's land, and that got faded. And VIX is showing a little bit. We're right at that 5,000 battle. Right at the 5,000 battle. Where's 5,000? Here's 5,000. All right. This is the old line in the sand, folks. I wish I could tell you which way it was going to break. Folks, if I had a crystal ball telling you definitively what was going to happen, I would tell you. You would be rich. I would be rich. We'd be having a party every single freaking day. But I don't. And in reality, no one does, because if anyone had that form of predictive capability, they would be the richest person in the world. No one has it. No one. If you're trying to seek the holy grail, that is the puzzle of are we going to bounce or break down, you're searching for something that truly does not exist. Truly does not exist. Matt's anabolic factory empire incoming. Hell yeah. Hell yeah. All right. We're just watching 5,000. Here's it on the one. Ugh, that looks so messy. Let me go maybe to the 30 second just to clean it up a little bit for you guys. Here we are. Are we holding it? We've tried to break, bounce, every single time. Bounce. And actually decently sized bounces too. I mean, these have been 20-point bounces. These have been $2 bounces in the SPY. And I don't know, maybe the 6th time is the charm. Since I have on a bearish position, I'm at the point in the day where I kind of want to start cheating. Yes, if you know what you're doing, you can cheat in the stock market. and most of it is based on using the proper emojis on your chart. So I try to let the market do what it wants to do today. I really, really did. But based on my positions, I needed to go down. So I'm kind of done pussyfooting around. I'm kind of done not influencing the market. As you can tell, the second you put on the proper emoji, and that's really important, that's when you can really see the market going. So as you can see, the second you put on the magnet, it pulls price to it. I'm not a scientist, so I don't know how magnets work, but I know this is the net effect of magnets. So that's just a little bit of a trading tip from me to you. If you ever need something specific to happen, just employ the right emoji. So we're just kind of back, and I don't like doing this because it isn't like, it's not the most fair thing to everyone else trading to have this type of influence over the market. So I don't like to use it that often. I kind of want to play on a fair ground with everyone else. But on days like today, when I have like a considerable amount of money going down, and to be fair, I already had that one losing trade. So what I'm attempting to do is just make that back, maybe get a little bit of green on the day. I think it's fair. I mean, I think it's been a bit, and I think I'm allowed to do things like this every once in a while, just to get the market to do exactly what I need it to do. Speaking of which, I am slightly green. I'm up by about 8 points right now, effectively break even, because we can move 8 points like it's literally nothing. So my trade is currently break even. I probably should de-risk a little bit. All right, I de-risked a little bit. I'm short at 411. Unfortunately, I'm already down by $1,800 on the day, so I needed to go a full 100 points just to be slightly green. I'm in at 411. I need it all the way down here at 311. Basically, I need it to snap this 1014 low just to get back to break even on the day. And then who knows? When we see it, maybe I'll take that trade. We're seeing a little bit of a... Dude, how many times are we going to do this? 1, 2, 3, 4, 5, 6, 7, 8. This is the 8 distinct test of like, are we going to snap 5,000? And then we just don't. I mean, we've already bounced 12 points. That's just fucking crazy. Oh, and unfortunately, like I said, where it decides to oscillate, it's right at my break even. Like... If only I just got a fill where like, oh, okay, if it's going to dance around when I'm kind of in the green, where like, why can't I be short here? Like, okay, what's it going to do? What's it not going to do? Instead, like it's literally oscillating around the point that I need it to either be red or green. Oh, look at that. My magnet's not working. It's probably because too many of you put on magnets the other way. Or maybe the hedge funds have learned my skill set and they're getting it. Do I just need a bigger magnet? Is that what... See, that's what happened is I told you guys what was going on. So you guys, to fuck with me, probably put magnets on the other side. So now I'm going to have to really break out the tactics here. And just remember, bigger magnets have a bigger pull. That's just science. That's clearly science. So let's see. Let's see price try to fight against that. Dude, we are in this range. This range is going to cost me a lot of fucking... Dude, I really thought that this was like... How many times can we test that level without it doing anything? I really thought the 6th attempt would be the time that we go, and I don't know, maybe lucky number 7 is what I'm looking for, but I'm not. That's a decently sized bounce out of it. That's a 50-point bounce out of it. Come on. That's a bring it back. At least bring it back where I can see a little bit of green. Like, why can't we just be arguing, oh, is it going to break 332? Like, why can't it just be dancing around there where I'm 80 points in the money? I'm up 1,600, and it's just of like, okay, is it going to be slightly red or slightly green overall? Come on. Magnet Life. Keystone Pipeline owner issues force majeure over oil spill. Oh, well, that's seemingly not a good update. VIX is still kind of flat here. I either want to see the VIX above 51.36 or below 48. We're still kind of technically in this chop zone. Looking at the flow, the Mag 7 still near the high of the day, maybe putting in a lower high right here. But overall, we had a huge pump up till 942 and then an additional drift to 1003. And since 1003, nothing's really been going on. In the S&P 500, it's actually a little bit more bearish. We pumped all the way up to that 1004, and since then a hit, and then try to recover. Not looking so good. And no one's really been touching the 0 DTE on SPX. Right there, the magnet is showing you exactly what magnets do. I know there's a lot of people laughing at me, but hey, you could laugh at me as I make bank, because magnets it's the way to really show the market what's up. It looks here. I'm going to set an alert by taking out the extreme 4986. All right. So I'm setting an alert there because, are we about to do it? Maybe I don't need the alert. All right. It looks like we might be taking out this 1014 low. All right. So now I'm going to move it to this next low right here. I'm looking at the low at 947. Okay. I don't know what this first one. Oh, this is where the NQ has caught itself 1, 2, 3, potentially now 4 times at this, like the 360, 370 level. Dude, stop catching yourself here. Like, why can't it just at least be dancing around at 32? Like, why? Because if it's dancing around here, I can move my stop to break even. And seriously, just make my life a bit easier. Just send it down. Why can't we be dancing around like 300 or something? All right. Oh, if I were a smart, good trader, right now, if I were in an improv class, if I were cast in a movie, if I was a character within a book and the purpose of my character was to be a good trader, what would a good trader do right now? Like a good trader. A good trader would at least take some risk off the table. All right, so some risk, I just took off, 70 points worth of risk. I'm up 70 points right now. I'm almost back to break even. I had a scratch trade, a loss of 1,800. All right, that's a fresh low. There's no point in me taking on risk. Okay, I have another lottery ticket. Worst case scenario is this trade is break even, and I just keep my current loss of 1,800. First trade, scratch trade. Second trade, loss of 1,800. Third trade, worst case scenario is nothing. Best case scenario is all the money and all the land. So I'm almost back. I think my break even is like right there. Maybe somewhere around here. Yeah. Okay. My break even is like roughly here. We're watching 300. Actually, I should draw out my break even. That line is my break even. If I can get out below this blue line, I'll be net positive, or at least. So really the goal right now is if there's another flush, I can move my stop to that level. And then the worst case scenario is my accounts are fine on the day. I told you guys were laughing at me. You're like, no way will a magnet, like, seriously, I put the magnet on at 1044. I saw the chatter. I saw the ha-has. I saw the hee-hees. I saw you guys thinking that I'm a crazy fucking lunatic, but yet you saw it in real time. What else can I prove to you guys? Like, you saw the second I put it here. You saw it. Like, with your own faces, you saw it. And you probably saw it with another person's face as well. Dude, magnets are OP. They are OP. I don't even know how they're legal, if you ask me. I would, on another flush, I really just want to move this stop down to this line, so I just know the accounts are break even on the day. But the trade is currently up. This current trade's up $3,000. But then obviously here's my locked in loss. So the column all the way to your right is the differential. But current trade is this middle one. Locked in trades are the left. So locked in trades, realized, unrealized live trades, and then the differential between the two. Oh, come on. Come on. Show me the money. All right. Maybe we should look at a slightly... All right, looks like we have an important swing low there. Looks like we have an important swing low here. Looks like we have an important swing low here. So I'm looking at the low at 938, at 926, and at 858. And then this top one is just for me to know where my break-even level is. I guess I could move it there right now. Like the odds of it getting wicked out are pretty high, but it would be literally a way to take all risk off the table for the entire day, because even if I get wicked out there, my accounts are back to zero. Like they're neutral on the day instead of being in the whole 1,800, because right now I'm down about 40K on the day, maybe 36K on the day. I feel like that's the smart move. All right. There also might be a VWAP bounce at 200. I didn't realize we were above VWAP all day. It makes sense. I just didn't even think to check it. We could definitely bounce off of VWAP. Definitely bounce off of VWAP, which is also a psychological level of 200. People love to play those like full increment levels. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, brother. All right, so 200, which in terms of the recent swings is no man's land, but it is VWAP. This top line is my break even. Obviously, my play is all the way up here, and I've already moved my stop to break even, so I know I'm not losing money on this particular trade. But for me to not lose money on the day, my stop would have to be here, which I didn't move it there yet because we're awfully close. And then also I know that there might be some sort of reaction at VWAP. So I kind of want to see the test of this first before I do anything too crazy. Or I could just take this trade right now, be net green on the day, and be like, yo, it's a crazy fucking day, and move on with my life. There's that. 50-50. 50-50 team. I see a lot of people saying take profit. And my question to you is why? Like, you would take profit if you definitively know, like, this is going to bounce. But as of right now, like, think about that in terms of quality decision making. Like, what do we know? We know we broke. We know that we're at some support. It might break. It might bounce. But, like the retail traders are just so easily tricked into taking profit early. You don't know. You just don't know. So it all just comes, if you are a trend following trader and then you're a person who's taking your profit too early, you're not going to be successful. You're not going to be net profitable because it inherently means you're getting out of your trades too early. I find that a lot of people don't have the resolve to sit there and be patient when things are going right, which is so interesting because people will sit there and do nothing if things are going completely wrong, and they'll let the pain compound and compound and compound. But then when things are going right, in kind of an unexpected way, they start to do like, they're like, no. I got to get out. I'm seeing a little bit of green, and you like just got to get out. And it truly is exactly what you should not be doing. I need to do some math. This doesn't make sense. I think that's the most I could go for on the day. It's just moving so quick. Hang on, let me just do math. 1,800. Oh, 1,800. Okay. That is the most I could go for. I can't go past that just because of the various consistency rules. I'm not saying that is my profit target. Of course, I would love for that to be hit, but there's probably a better chance than not that it's my trailing stop that's hit. What I would love to do is move my trailing stop to this wick, but I can't do that until we see probably this, I don't know, 17,220. Like if this is broken, 220. I could then move my stop to right on top of this wick at 1055. But right now it's just a little choppy. I don't know if it's going to break up or break down, which is why I can't move it quite yet. Of course, I could update it a bit and use something like this high, I guess. It doesn't, I mean, it's so far away, it doesn't really matter. What I want to do is get my stop to be below my account break even on the day, because then even if it gets hit, I don't care. I'm in the green. I don't care. No hair, don't care. The magnet, let me go back to this. Let's take the magnet off. Okay, so we obviously we don't need these trend lines anymore. We don't need that. We are in this transition zone, but we're coming to the bottom of it. So this is on top of it, bullish, in it, below it, bearish. If this does not hold, we're talking about this low level of 4,910, 4,900. It's what we saw yesterday, basically. The VIX is breaking out, so be careful there. The VIX is starting to pick up. NVIDIA is getting hit. Bitcoin's dropping here. We don't need this anymore. We don't need this anymore. We don't need this anymore. We don't need this. We don't need this. And we don't need this. The SPY just made a fresh low on the day, and the Qs are testing the green to red move, and we're not far away from that low on the day. We're about to take out 20. Okay, how do I want to do this? How do I want to do this? How do I want to do this? Oh, do I just want to let it cook? Like, you know, like when the chef's in the kitchen, you don't want to interrupt them, you know? When the chef's in the kitchen, you don't necessarily want to interrupt them. All right, I did move the stop that no matter what, my account will be net green on the day. The question is, how much net green will I be on the day? That is the current question. It's either net green by 200 or net green by 3,000 are the extremes. 3,000 would be down here. 200 would be if this gets hit, or I could always just choose to get out early somewhere in between, and then that's what obviously the profit might or might not be. 200 net profit, and I'm saying net like actually unrealized. The stop is at that point where I'd be fine. That would be if this gets hit, which is possible, or I could get lucky with a capitulation and quickly just, I don't know. It looks like we bounced a little bit above 200. I'm not surprised people stepped in. They stepped in at 206. But if we get a little bit of a puke, this would be a $3,000 net profit per account, which would be $60K in total. So I'm either making $4,000 or I'm making $60,000. That is the game that I am currently playing today. What's it going to be? If you had to cast your bet right now, if you had to cast your vote, this is kind of like American Idol, except you guys are trying to predict what the fuck is Matt going to do today. Do you think it's going to be the 200 option, or do you think it's going to be more of the 3K option? And that's obviously, do you think we're going to reverse all the way back up here, or do you think we're going to come all the way down here? Which number do you think is going to be hit first? Cobb salad with extra blue cheese. I don't know what the hell you're talking about. I don't know what the hell you're talking about. 200, 3K, 60, 45. Someone's going in the middle. I'm not loving the drift back up. If I'm being honest, I'm not loving this drift back up right off of VWAP. It's expected. I'm just saying I don't like it. It's by no means a surprise that we bounced at the level we did, at least on attempt number one. I was just hoping that the bounce wouldn't be sizable. I was hoping that this would kind of be the extreme, and then we'd be like, nope, we're cratering below VWAP. But that's the risk you take. That's the risk you take. I'd take the money, and that's why no one will ever remember your name. Probably the best quote from the movie Troy. Remember, this country wasn't built on pannikins. Higher lows, he's cooked. Yeah, says Viper. The market expert Viper. Higher lows, he's cooked, team. Oh, Matt's so cooked. Maybe, dude. I don't know. Maybe I'm cooked. Maybe I'm onto something. You never know what it's going to be. You never ever know. Was looking good there for a second, and then wrong. And once again, what's happening is we just keep bouncing off of VWAP. It's this dashed white line. We just bounce. So maybe I'll get lucky and they'll try to push it below. Maybe I won't. The one thing for me is at least to get this max profit, at least I don't have to get like some huge puke. Like it could even be a little fake out puke and I'd be fine. But on top of it being VWAP, it's also the $100 level. It's 17,200. So there's good reason that people are stepping in there. I guess I'm just in the boat of hoping that they're wrong. But I don't know. We're going to find out. We're going to find out. Man, I get that there's the argument of like, yo, just get out now. You could take your 1K per account net. You'd be up 20K. You live to fight another day. But then like with this kind of movement and stuff, I would be so enticed to just keep trading. And I just don't want to. Like I want to just get in and get out. Get in and get out. Oh, is it going to go the other way where it perfectly wicks me out and then dumps anyway? That's probably what's going to happen. And how much is that going to piss me off? How much is that going to piss me off? Yeah.
Order canceled.
Made between 250 and 300 per account. Just wicked me out. Just wicked me out. And of course, now it's going to dump. Of course, it's written in the stars. That's how it has to go. But anyway, at least didn't go red. At least didn't go red, which is kind of what I care about. Kind of what I care about. The accounts are safely in the green, and I just had to protect myself because right here, you never know how big these bounces are going to be or not going to be. The SPY finding support, barely making a new intraday low and then pumping, and it's actually going back to this red to green test. Same thing, the Q's finding support right at this green to red move, and actually didn't even make a new intraday low, and we're bouncing a little bit. So, like, I do believe this fails. I want to be clear. Like, I very much do believe we're about to go, but it's just when you're trading these and with the drawdown, like, this is such a bounce. We went from 220 to 340. We just bounced like nothing, 120 points. So even you could be on the right size, but just because of like the random whipsaw of this stuff, you can get beat up and beat up really quick, even being on the right side, just because like the ranges that the market's currently experiencing are so incredibly massive, which is why even on this, I mean, I think my play was in here at 411. I mean, it could feasibly still go all the way up here, push what, if I held that position, it could have pushed it into the red, and then we like just puke anyway. So it's just, I guess at a certain point for your own mentality to like not have to watch it go from big green to big red to big green to big red, I find that like that tight stop loss following is the way to go. And when you do it, you're going to get like knocked out a lot. But then you do that just because of examples like this of like the reason I was aggressively there and I was literally just using that recent high was because right now I'd be seriously sweating. I'd be like, dude, like, is it coming for me? Did I just like give back all that money that I was up? Because at least here I was able to secure being in the net green. And then if it ends up failing, guess what? The beautiful thing about futures trading is that there is no pattern day trading. So you could trade as much as your heart desires. Vol taking a big hit there. Over the past 10 minutes for whatever reason. I don't know. Right here was right at the turn of the hour. Dude, it's already 11. It's already 11. Was there a piece of news that caused this? What do we have here? Options on the Mag 7 getting hit, kind of getting this swing back up. You have to see, are we actually going to keep swinging, or is this just a lower high and we're getting a dead cat bounce? It could easily be either. Same thing on the S&P 500 was getting pretty like manhandled, and then at the change of the hour we're pumping. But we're just at the we're literally just battling it out at the red green line. This white dash line above it, we are green on the day. Below it, we are red on the day. That's the battle. And you could see that's right where the SPY's battling, and that's exactly where the Qs bounce off of, which is why I highly recommend every single day, especially if you're trading the overall market, know the previous trading sessions, high, low, and close, because you so commonly see large reactions there. And you see quite a bit of a battle there. So it's no surprise that the SPY bounced off of its intraday low and is currently battling it out at that red-green move, green-red move. And then the Qs not only bouncing off of the intraday low, but also bouncing off of the closing session value from yesterday. So it's very important to know where those are at. Very, very, very important to know where those are at. Time sensitive. No, that's not time sensitive. I'm hanging out for a second just because I want to stream this if there is a failure. If there is this, like if we pump and it just ends up being a lower high and we start to puke. The mag 7 is now going flat. The SPY is still climbing. What's happening in the SPY? Once again, longer duration put deltas popping, and I guess longer duration calls. So no one's really touching the 0 DTE today on the S&P 500. With respect to the mag 7, same thing. It's more of the the put delta that pumped. So it's not people aggressively getting into calls. We're just seeing puts being sold, whether to open a position or close a position. So either they're locking in their profits or they're creating a floor and saying, hey, we don't think we're going to go below it. I don't know what it is. You'd have to check the change in the open interest to know if it's new positions. But it's just that put pop. The put pop. The put pop. And where are we at over here? Yeah, we got that sizable pop off of VWAP, basically. So there was a lot of things that aligned for that pop we just saw. We bounced off of VWAP. We bounced off of the intraday low. We were bouncing off of the green to red move. Like, there's a lot of reasons why we bounced right there. So I gave it a shot. I literally just used a recent high as my wick. It wicked me out. My accounts are in the green. I have nothing to complain about. I gave myself a shot just in case there was an official breakdown and capitulation. I was there. I gave myself a chance. But when you are very aggressive with your stop movement, you have a better odds than not of unfortunately getting stopped out. And that's exactly what happened. But you do it because every once in a while you catch that capitulation, and then that's where you get the big money returns. So basically you're just trying to keep everything stable, maybe slight gain, and then you're in it for like those big ones. And you never know when it's going to come. You never know which cast of the fishing pole. You never know which toss of the lure is going to catch it. Should have taken the money. Nope, the math wouldn't suggest that at all. That's like it's just a very novice, rudimentary way to do it. If you talk to any professional trader who's more so of trend following, you'd say, no, you follow the trend as long as it is intact. You don't just randomly take the money because you see green on your chart. So, and that's common. Like retail traders really don't have the right mindset of trading, which is why 95% of retail traders end up losing money because they don't know how to properly manage it. They don't. So like this idea of should have taken it, you honestly just don't know what you're talking about. How many contracts at a time? One contract, but I'm trading it on 20 different accounts. So I have a copy trader that whatever I do on one account, the lead account, it perpetuates that trade to 19 other accounts. So technically I was trading 20 contracts, but it's just one contract per account. You did good today considering a rocky start. I appreciate that. Yeah. I mean, it really is just like, it's a trading plan. Just stick to your trading plan. And you guys saw I got wicked out. That's unfortunately. One of them, I had to take a loss. It just didn't go. There was like one more bounce. That was on the 4th or 5th test of that breakdown. It had a large bounce. I had to protect myself in case it was like a continuation. And then on the very next one, it was the actual breakdown. So I was able to catch it and make it all back and then some. So it's just this key of identify low risk opportunities and stick to your risk, stick to your risk, stick to your risk. That's simple. Do you pay capital gains tax on every day trade? No one on this planet does. You pay capital gains tax on your net gains at the end of the year. You don't pay it on every trade. You pay it on your net situation. If you make 10K, lose 5K, you would pay net gains on the capital gains on that net differential of 5K. You wouldn't pay it on every trade. I don't know who's telling you that, but that's not how it works. I would argue retail is too focused on making money instead of the process. Probably. I think there's too much emphasis on the retail perspective of every individual trade, when in reality, the emphasis should be on the overall system and methodology, because even on a perfect setup, you could lose money, and on a horrible setup, you can make money. I say this time and time again, but you should be judging the quality of your trades off the decision-making that went into getting into the trade and the management of the trade, not the outcome of the trade. You don't control the outcome. You can control the decision-making that went into it. I'm seeing a little bit of a hit here. All right. I'm going to give it another whirl.
Order submitted.
All right. So speaking of decision making, this might be a good teaching point. Okay. So what decisions did I make to now take this short trade? I'm short at 340. All right. Let's go over it. So once again, let's review the process. Intraday, ever since 10:03, I now see lower highs and lower lows. Lower highs and lower lows. So I would argue that the price structure is bearish. The short-term trend from 10:30 to this moment is bearish. Okay, that's one thing we're looking at. Then we look at momentum. The 5-minute and the 10-minute are bullish, so that's not so good, but the 30-minute is bearish. So that's kind of like up in the air. 5-minute, 10-minute bullish, 30-minute actually was bearish, trying to bounce, but we have 15 minutes till this bar closes, so we would have to wait technically to judge that one. But on the last close, I generally look at the last bar's close. At the last bar's close, that was bearish. Okay, interesting. This doesn't necessarily, it's not an A+ setup because the momentum is against me. That's 100% fair. But what I find to be the most influential right now is the options flow. And I saw we pumped up until about 11:12. And now we're seeing a little bit of a drift down. I'm hoping that that drift continues. Of course, it could reverse. Same thing. I saw the SPY bounce all the way up until 11:11, and since then, a little bit of a drift down. I'm hoping that that trend continues. Of course, it could completely revert. Like the trend is literally based on real-time trading, so I don't know. So you're kind of looking at it, and then you're like, all right, I saw a breakdown right here. Maybe it works, maybe it doesn't, but then that's why I have my stop at this recent high, because like at a certain point, you just like admit if you're wrong or not. And that's it. So it's just looking at price structure, price momentum, and options flow. And then if you can identify an opportunity where you're about to see me get stopped out. Yep,
Order
just stopped
canceled.
out. When you're wrong, you admit you're wrong. And I'm assuming what happened is this popped. Yep. So I got in, and this is like, you have to understand that when you're in the trade, there's about to be things that are out of your control. And out of my control, I saw this dip, but then randomly at 11:15, there was bullishness in the options market. That you have to accept that there's things out of your control. It could be other traders, it could be announcements, and that's why you just always have your risk, because there's going to be a non-0% chance that you're wrong. So we started to drift down, and I thought, oh wow, okay, we double top, we're about to come down, and there is that chance that we can puke. But instead, literally a minute or two after my trade, right here at 11:15, it popped. So like those are things that like you cannot predict. It is impossible. Right here, we bounced. It looked a little lethargic and it almost came down. Nope, fake out. And right, I'm showing you right here at 11:15, someone splashed the options market and it got it to pop more. That is stuff like 100% out of your control. It is 100% out of your control. So if you're trying to predict that type of a thing, you're never going to be successful because you cannot predict that. All you can do is judge the current momentum, structure, and options flow and say, okay, can I maybe take a with trend, in trend trade? And what is my risk in case I'm wrong? That's it. Just make it that simple. That simple. Are you going to live stream the 10-year bond auction report? No. Taking profits is in your control. Of course it is. But more important than taking your profits is your risk management. Like of just when you're wrong, like what is your risk point to say that you're wrong? That is incredibly more important. I don't know. I see that you guys are trying to give advice and whatnot, but just remember, 95% of retail traders end up losing money. So 95% of what people are telling you is going to be wrong. And a telltale sign of a retail trader is they hold on to losses too long and they get out of their winners way too early. That is like such a common breakdown. And you see that and then you wonder, okay, like, is it good to be like that? And the answer is no, because 95% of retail traders end up losing money. So as much as you guys are giving advice, and some of it's good, but some of it is also like legitimately not how you are a profitable trader time and time again. Please explain how you turn sim money into real money after passing the eval. Just you go from the eval to the performance, and if you trade well enough, you can request out money from your account. I don't. Full transparency, beast. What do you mean full transparency? Just go read the website. Mr. OCD, it's literally on all of their websites. You sign up, You take the test. If you pass the test from the eval stage, which is making a profit without having a certain amount of drawdown and other various rules, then you go from eval to performance. And when you're on a performance account, if you trade well enough, you can request out money from your balance. It's not like, there's not some like giant secret or anything. Just go read the website, I guess. I don't know. I guess I would need additional clarification from your side of what your confusion is. You take the eval, you go from eval to performance. If you trade well on the performance and follow all of their rules, then you could request out money from your balance. And then if you get it approved, it deducts it from your balance and it goes to your bank account. And then it's weird. Full transparency, just go read the website. I don't know. Can ChatGPT do the test for me? It's a trading test. You have to actively trade. You have to hit a certain profit target without having a certain unrealized drawdown. And you guys could check it out for yourself. The easiest way to learn is just to do it. I mean, you could get 30% off the test right now, and there's no activation fee. Just use that code Goonie, and it's pinned to the top of chat. It's in the description. But that's why I use my risk, because, I mean, it could break down here, obviously, or it could just keep going. I think a lot of trading is just admitting the things that there's a lot of things out of your control, specifically what other traders are about to do, what news is about to be announced, and that type of stuff. So with it, you just kind of sit and wait, and you never ever put that much emphasis on a trade. You put huge emphasis on the methodology, on the system, on the process. I find that another thing that's weird about retail is like they think like one trade is the end all be all. Like if you make money on a trade, it's a great trade and you're awesome. And if you lose money, you did something wrong. And that's honestly just not what the market is. You could do all the things right and still lose money. You could do all the things wrong and still make money. So because of that, like the market, because of all the unknown variables, it's just basically going to be normally distributed. You never know what the next bar is going to be. The next bar could be a huge green bar. It could be a huge red bar. It could be somewhere in the middle. That is literally just out of your control. And I find that in retail, they're really judgmental of that. Of like, if you made money on that trade, you're good. And if you lost money, you did something wrong. That's not true. It's just 100% not true. You should be making money in the long term. That means you're a good trader. And if you're losing money in the long term over a succession of many trades, well, obviously you're then doing something wrong. Whether it's just not a good system or it's risk management, or maybe obviously it could be somewhere in the middle. I don't know. But there's like so much emphasis on one individual trade. Like one individual trade, and it's just not the game. It's just not it. Matt, if you were long-term investing, would you be comfortable adding here? I'd be comfortable, but I'm not going to, because I think there's going to be a better opportunity. But I mean, comfortable, like whatever. Dude, if it gets hit an additional 10%, do you really give a shit? If you're truly here to invest and it gets hit by 10%, like that, a good investment will not care about the 10% now, like years, potentially decades down the line. So would I be comfortable? Yeah. I'm not going to, because I think I could get it an even better price. But also I would be absurdly comfortable at this level, because I understand if NVIDIA takes another 10% hit, if Tesla takes another 10% hit, if whatever, Apple, Microsoft, I don't care. Like if it takes a 10% hit now, that's not going to matter in the long run. In the long run, it's more of, did you have a good fundamental thesis on that company? If 10% now matters in 5 to 10 years, that like it effectively means it didn't go anywhere in that time. It didn't go anywhere in that time. Matt, how many years of institutional investing do you have? 0? Institutional investing? Why the fuck would I ever want to do that with my life? That would be a telltale sign you shouldn't listen to me. Institutional investing? Matt, please take a break. You're tilted and we love you. We got to take some time. Tilted? What? I'm not even in a position. How could I be tilted? That's an interesting take on the situation. Being tilted. Angry Matt is the best. What am I doing that's angry? What the fuck did I possibly say or do? I'm literally not in a position. I'm just answering questions. Angry Matt, he's tilted. I'm so lost here. How could I be tilted if I'm not in a position? I mean, you guys have not traded at all. If you think this is what tilted is. Not at all. If any, this is we just got a double bottom and I try to take this reversion here and my stop got hit and that's it. Yeah, you guys really haven't seen anything. If you think this is some form of an emotional response, you guys have not been around the block, dare I say it. Have not been around the block. We are getting this weird slow grind to the upside. All right. Well, now that things are calming down, we're actually seeing the VIX come back a little bit. I wanted to stay to see if we were going to break, but obviously since the time we've been talking, we're seeing a bit of a pump here. Not the craziest pump. We haven't taken out any recent highs, but obviously a climb, a grind to the upside, whatever you want to call it. The 5-minute, 10-minute is bullish, 30-minute is in transition, 5-minute, 10-minute bullish, and 30-minute, it's going to close in 4. That definitely looks a little bit more bullish. We are just right back at this level. See how the level I called out, 4,950. We got to 4,948. We bounced right off this level. That was called out to all of you before the market opened. And how did we know that? Not only did we know it was a big open interest level, but we knew that this would be kind of an inversion of the current state of gamma and delta. So it's kind of a telltale sign. And on top of that, it happened to be pretty much the green to red move on the Qs and also the low on the Qs. So there was a lot of, and it was also VWAP. So there was just a ton of things going on at 11 a.m. that were like, dude, there's people going to react. And they did react. And instead of selling and being bearish, it actually quickly was bullish, and then we just bounced 60 fucking points. So we're now back on the top side of the transition zone. Obviously, the last times we were here, it failed, but who knows? Maybe this was enough of a bounce to get people excited and be like, no, we're not selling anymore. Maybe it holds. I would be doing the same thing we've been doing all day. Check the momentum. Are we above or below the EMAs? These colorized clouds, that's all they are. It's just EMAs. There's nothing really special to it. It's just nice to know, are you above or below the average price? Checking the options flow. Checking is delta pumping, which the SPY it is. The Qs had a big puke and then somewhat of a recovery. The SPY is now showing more strength than I anticipated. But potentially stalling out, or it's just indecisive here at 5,000. Does it really want to hold this or not? So watch for this battle. But weird, like right at 11:15, this is the pump that knocked me out. I thought we were going to fail here at 11:13. Looked like a pump coming back over, getting rejected, blah, blah, blah. Small risk, high reward. Obviously, this time it didn't work out. But once again, if you're judging it off a singular trade, you kind of just don't know what you're doing, because literally 2 minutes after that, someone splashed the pot on options and we got this pump right up. And then since then, pump, slight drift, but nothing to it. But I am kind of watching ball and I'm curious about why it's stalling out. But even right now, I guess we're getting kind of closer to that lunch hour. It's just not the most is going on. Things are just kind of calm right now, which is in a weird way expected, because so many people were expecting Armageddon today. I mean, similar to what some of the emotion we're seeing in chat right now is like what was all over X. Like everyone was panicking. And I find that the market loves to just do the opposite. Right now, they were just coming in bearish, panic, circuit breaker halts. Then, hey, maybe it still happens. But at least as of now, for the first 2 hours of trading, it's not bearish, it's a little bullish. And then from that, like on top of that, additionally, we are kind of seeing a setup where, like, even though vol's high 50, we're not really going anywhere. There's no strong trend on the day. So I would just say chill, wait. I obviously stick to your plan. You gotta respect your risk. Don't let yourself get blown out, and don't oversize. Don't let your trades go past your risk point. You know when to get in, you know when to get out. And other than that, if you catch a nice trend, ride it until you think that the trend is no longer. Check out Take Profit Trader. That's right now financially the best deal if you want to trade with someone else's money. Pinned to the top of chat in the description of the video. Don't forget to use that code Goonie if you want 30% off for life, and also no activation fee. That's right now why we're talking about it, because there's many different sim to funded prop firms, but right now I would argue that is the best one with the best financial deal. So for me, it's always about, can you just get in with the best deal? That's what I have for you. We'll be posting an update video at 7 today, and then we're going to be streaming once again tomorrow morning. Be careful this afternoon, because at 1 p.m. there's the bond auction, the 10-year note, and then at 2 p.m. we have the FOMC meeting minutes coming out. Those are the meeting minutes from the last meeting. So just be careful. There's some market reaction at that point. So that's coming out today. Tomorrow, actually, we're starting early tomorrow because of the CPI report. So Thursday, not only are we getting closer to really earnings season, but we get the CPI report, the consumer price index, coming out an hour before the market opens tomorrow. So just, I guess, be on the lookout for that, and we will be starting early. So that's what I have for you. Best of luck. Stick to your plan. I hope you make a shitload of money. Peace.